Hey, my name is Prithvi, and I'm the creator of Learn Accounting Basics, a crash course into QuickBooks Online and Xero, which is coming soon. If you're watching this, you probably came here to try to learn how to do bookkeeping for yourself on your own business, learn how to do bookkeeping so that you can move into a junior staff accountant role or a bookkeeper position, or you're a corporate accountant that really wants to just quickly understand how small business accounting works. And I actually made this course as a prior tutor to be able to quickly catch you up and teach you all the fundamentals, whether you are an expert and a corporate accountant already, or you're a brand new person to accounting, whether you're a small business owner that started a new cleaning business, or you're somebody like an admin assistant or an APAR analyst that is trying to understand what full cycle accounting looks like so that they can move on to being the next junior accountant or bookkeeper role. So just to give you an idea, I did actually create this course for myself as if I was going to be a student back when I created my first automotive shop. This shop, when I first started it, had a lot of small little things in the books that I should have got correct. And so this course is legitimately designed as me as a tutor trying to teach you as a student all of the ropes of just how to do your monthly bookkeeping, make sure it's done correct, and make sure that you actually understand what you're doing so that you're not just guessing anymore, right? A lot of the courses out there do a great job of teaching you how to click all the buttons and what all the buttons do, but they don't really give you the example of why you would press that button. And this is exactly what that course solves. So whether you're starting a new job and you need to learn how to use QuickBooks Online, whether you've started a new business and you need to have tax-ready financials, or a seasoned accountant that wants to learn how small business accounting works and get a quick refresher on exactly how a regular small firm would do this. So if you're interested in getting started, the course is only 3.5 hours long and I don't cut any of it. So if you follow the course minute by minute and do everything that I'm doing alongside me, you will literally learn how to do everything in 3.5 hours. It's designed to be finished in around 2 weeks. If you're really motivated, you could finish it in like one sitting in one day. And I highly encourage you, if you want to check out more of the videos, the full video will be posted on YouTube for free if you want to just skim through the 3.5 hour video and see if it's for you. And it's available for free if you really want to figure out how to do it for free on YouTube. So thanks for watching, and I hope you get something out of this course. Feel free to join our Discord or our subreddit so that you can ask me questions directly. I am a tutor first, so I'm here to teach you and help you be confident in the work that you're learning and the work that you're doing. Thanks, and see you inside the course. Hey y'all, my name is Prithvi, and I will be your teacher for learning the basics of bookkeeping. This course is meant for aspiring bookkeepers, business owners, people that just need to learn bookkeeping as part of their job, whether it's being an admin assistant or anything else. This will really be like a crash course that will teach you a lot about the fundamentals of bookkeeping and accounting, alongside being able to use a software like QuickBooks or Xero. This particular course will be based on QuickBooks, and we'll have different courses in the future that focus on, another software called Xero, as well as different types of businesses. This initial course will be based on 12 months worth of transactions, as if you're opening up the business and performing a year's worth of business. We will be doing the books on a cafe. So imagine a really small cafe with a couple hundred square feet of space, just like a bar, and they're subleasing from another business to be able to be in this small little space. We're going to be going through the exercise as if the business owner gave us a full year's worth of books and said we need them to get caught up for tax purposes or whatever it is. So there will be a full 12 months worth of transactions, and we'll get a lot of practice out of this and a lot of understanding out of why we're doing everything. We're going to be going from the start of setting up our chart of accounts, understanding how they flow into our reports, and doing all of the bookkeeping and checking our work. So let's get started on chapter one, and I'll see you in the next video. Okay, so chapter one is really going to be about just kind of how the course is going to work and giving you an overall structure to how to access everything. So let's get started. Really, the overview of what I want to teach are the two financial statements that really are the core to all of accounting, which is the balance sheet and the profit and loss. There's a third one called the cash flow statement, but to a bookkeeper's purview, the two that matter the most are the balance sheet and the profit and loss. Um, how do we get to the balance sheet and profit and loss? We have to understand the chart of accounts, which is how all of the transactions kind of are organized. And once we set that up, we really need to understand how to categorize the transactions from the bank feed. So we're going to understand how to categorize everything. We're going to understand split transactions where you might have to pick two different categories for a single transaction. And we're going to understand how to reconcile everything and make sure that everything matches and we're good to go and we can move on to the next month. So all of this is to basically help you understand holistically bookkeeping at a core function, how to do it, but also understanding how to look at the statements, review the statements, and that is basically just how do you check your work. And so that's essentially the whole goal of the course. The next part is materials and access. So you'll have a Google Drive folder shared with you. If when you get access, you'll see this folder shared with you. Um, and you will get a QuickBooks invitation as well to join. And there will be one more, which is for the Discord, but that'll be coming later. But you'll even have access to this presentation. So if we go to the home folder, if you go to shared with me, you'll see the Learn Accounting Basics folder. And you'll see the syllabus right here, which is the presentation we're looking at. And the documents will be everything we'll need to know over here. This is just whatever you'll need to be able to reference back to. And we'll go over what these are more in depth when we get to chapter 2. For software access, again, if you just signed up for this course and you're like already trying to go really quickly, I should get you an access to the QuickBooks Online software within 24 hours. If you email me separately, I might be able to get to it quicker, but I'm going to try to keep on top of this as much as possible. So just try to reach out and I'll do my best. Chapter 1 is a community and resources. There's a Discord community, and like I mentioned before, it's really about being able to learn by doing. And as a tutor, before I started working full time in accounting, I really valued being able to practice and learn. I think you learn the quickest. And the whole reason I designed this course in the fashion that I have is to be able to quickly learn this and really quickly get up to speed in a fundamental manner that will help you understand what you're doing, even if you're a little lost at the beginning. So let's get started. Get everything set up, feel comfortable with what you're using, and we will jump straight into chapter 2. Alrighty, now we're getting into chapter 2. Let's really get into what we're going to do. Unfortunately, in chapter 2, we will not be categorizing any transactions. We'll be getting set up, looking at the raw balance sheet and profit and loss. Almost nothing will be on it. And then we're going to start setting up our chart of accounts. So my goal is to kind of help you understand how things should work, but not in extreme detail. We're just kind of overviewing it, and you can look back at this and maybe go, that's a good, like, now I really understand why we did it that way. But for now, this is just more of a how to navigate QuickBooks and how to get where you need to go. So when you get to your QuickBooks, you're going to click the Let's Go, and you'll have an account that's already set up for you. Um, it'll have your email. You can choose whatever you'd like here. So let's say you want your username to not be your email. You can do that. Prithvi, GPTC, bookkeeping. And I'm going to put a password in. And I'm going to use a phone number. All right, let's get started here. It's going to ask you for a code. So that's definitely fun. Let me get my code out real quick. My phone. Do not share this code with anyone. All right, cool. So we're going to get signed in for the very first time. I'm going to just hit get started. Going to click bookkeeper and accountant. Let's go. The first thing we're going to look at is our bank transactions. So we're going to go to transactions, bank transactions, and we'll end up at this page. And you will see a lot of transactions, almost 1,000, but don't let this scare you. I'm going to teach you both how to do bookkeeping and how to use QuickBooks pretty efficiently. So this 938 will start to dwindle pretty quickly as we go through everything. And you'll see here that you have a bunch of different descriptions of transactions that are coming through from the bank feed, and we're really just going to go through and figure out what we're going to do with all of this. So the next piece that I really want to show you is a chart of accounts. And right now, when you click on chart of accounts, there isn't going to be much over here. And if you don't know how to get the chart of accounts, you can hit transactions and go to chart of the accounts. All of these bank transactions have to be categorized into something on this list, right? So if you look here, we have the Chase Bank checking, which is where all the bank transactions start, but we don't have a lot of accounts that will lead into things. So for example, we would need an account called Cafe Sales to record all of the sales that are coming in. And I know there's a one called Sales here, but it's good to set up your own chart of accounts in a way that makes sense to you. So I like to kind of ignore the default and kind of build something that makes sense for me. So that's kind of just a quick overview of the chart of accounts. Okay, so the last thing that we need to look at is the reports. So the reports, if we go to the reports tab here, we'll see that the balance sheet and the profit and loss are right at the front. As you'll see, there's nothing in here right now because we haven't done anything yet. But this is where we'll have our report that shows all of our income and all of our core expenses to running the business and our net profit. So this kind of shows us our profitability here. And I know it's empty, so let's get into setting up our chart of accounts. All right, so let's go on to setting up our chart of accounts. On the next slide, if you zoom in here, and if you want to pull this up through the drive and look at it yourself rather than trying to squint through the video if it's not too clear, we're going to start with the right three columns here. The right three, income, cost of goods sold, and operating expenses, are all part of the income statement. On the left side, assets, liabilities, and equity all belong in the balance sheet. Right now, if you kind of look at what types of accounts are on which, you'll kind of be able to see how the balance sheet and the income statement are separated. But for now, I'd like us to just start with the income statement and start building out what we need on the day-to-day operations of the business, right? And so for the first column we're going to look at is the income section. And we're going to simply do cafe sales and merchandise sales, right? So imagine a coffee shop. They're going to sell coffee and maybe they're going to sell some mugs. So we should have two income accounts for coffee and mugs or any type of merchandise like t-shirts that they want to sell. So let's go over here to QuickBooks, transactions, chart of accounts. We're going to hit new and we're going to write cafe sales. And our account type, I'm going to scroll down and I'm going to find income. You're going to see in the detail that this says discounts, refunds given. Now, really, from an overall perspective, it doesn't matter what you select here because the way you organize them and the way that they come out to how the CPA sees them and how a business owner would look at reports, the detail type doesn't actually make too much of a difference. But let's keep it clean and let's make sure we pick the right stuff, right? So for an income type, we're going to do sales of product income because we're selling our product here, right? Now you can see there's a service and fee income line. This would be something that's more in line for, let's say you're charging someone for bookkeeping services, or let's say you're doing consulting services, or let's say you come and do landscaping, right? Because landscaping is a service where you would go and cut their lawn, but they're not getting something at the end of it, right? Your product, what you're selling them is not the bag of grass that you've cut at the end of it. You're selling them actually cutting it, which is the service. So here, since we're selling coffee, we're selling like a physical cup of coffee, we're going to use sales of product income. And you can see there's a make this a sub account, but we really don't need this right now. Where that sub account comes in play is where we have some of these examples where you have a colon and then several different items, right? But again, this is probably a better example of that, utilities, and then you have insurance and electric water underneath. But yeah, so we've set up our first one, which is cafe sales. The next one we need to set up is merchandise sales. So let's go ahead and set up that as one. As one, we're going to hit save, and we can do save and save a new, which just throws us into a new one. And I'm going to hit save just so you can kind of see how this looks without hitting the save and new. Go back to new. We're going to hit merchandise sales. Again, this is an income account. And again, this is a product. You're selling something for real. So we're going to hit save. Let's go back to our chart here. The next that we have to set up are COGS, cost of goods sold. I will get into why cost of goods sold are different from OPEX later when we're actually reviewing the income statement. But for now, I want you to kind of look at setting up these COGS in the way that I am. So we're going to kind of go through, and I know these aren't in perfect order, but think about everything as cost of goods sold as directly related to selling your cup of coffee. And again, as you do examples and as you set up your chart of accounts, you'll kind of start to understand the relationship between why something like your monthly insurance for liability insurance isn't really a cost of goods sold, and why dairy and grocery is a cost of goods sold. Now let's go ahead and set these up real quick. The first one we'll set up is merchandise purchase. And then if you scroll down here, you'll see a cost of goods sold. And here you'll see cost of labor, equipment, supplies, materials, freight. This is the supplies and materials. I'm going to hit save, and I'm going to use the save and new button this time to make this go a little quicker. When you do save and new, it will set it up as the same thing that you did last time. So the next one we need to set up is dairy and grocery. And if you'd like, you can set up your account name to be something like this, dairy and grocery costs. So I'm going to go ahead and set up a little more granularity in what I'm doing here. That save and new button again. The next one is going to be baked goods. So why is baked goods on there? Looks like we might be selling croissants or other things that we're purchasing. So baked goods cost. The next one's going to be coffee and bean supply. Equipment rental. Now remember, if we had detail type, we can see there's an actual detail for equipment rental. So we can go ahead and select that. And the last one is paper cups and goods. Put that as supplies and materials. Save and new. All right, so that takes for the first two columns. Let's go to this last column. We have OPEX, and let's just fill in our chart of accounts and make sure that we have it. Now, one thing I also do want to quickly go on a side tangent about is, let's say you kind of are setting up a fresh set of books for somebody you don't know. One, you have the community. If you want to come ask me, I can help you get a chart of accounts that works for you. But two, you can always ask something like ChatGPT, hey, I have a cafe business that has really simple transactions. It only has a bank account and XYZ. What type of chart of accounts should I set up to generally encompass all the transactions that I'll need to see? And it'll give you a list of all the chart of accounts that it probably thinks that you need. And it's probably going a little overkill, but it's a great place to start if you really need to understand what's going on. I'm honestly a big advocate of using ChatGPT. It's not going to do all your work for you, but it can lead you in the way to understand what you really need to know. So let's go ahead and get the rest of these OPEX accounts set up. We're just going to go through and, we're going to pick the right detail type and we're going to see what we need to do. So the first one is advertising. And this is an expense. An expense. Here you can choose different expenses. Obviously, this is advertising or promotional, so we're going to keep it there. Hit save and new. The next one is small kitchen tools and supplies. And we're going to make this a materials account. Here we have utilities and then two sub accounts. So let me show you how to set up a parent and two child accounts for this. So we're going to use utilities. We enter expenses, and then if we scroll down, you'll see a utilities option. And then we're going to say utilities parent if you really want to have the description in there. The important reason of having a description or just understanding what the parent account is so that you don't actually book something to it. The idea is that if there's a parent account, you're only booking transactions with a children account. And we'll look at this later as we start to review transactions after we do our first months of books. We're going to hit save and new. And to put a utility account underneath, because remember the two sub accounts was insurance, electric, and water. So we're going to do insurance expense, and we're going to make this a sub account of utilities. And you'll see this kind of branches out like this. Water and electricity expense. And then we're going to make it the same sub account of utilities. Okay, so you'll see you have two sub accounts under utilities now. All right, save and new. Let's move on to the next one. Bank and processor fees. And processor. We're gonna look for something that makes sense here. This is one of those things where the detail doesn't matter too much, in my opinion, because if you put it under finance costs, to me, that's more of like an interest expense that you're paying. But this isn't an interest expense. Oh, there we go. It's a bank charge. Anyways, so kind of see how my thought process was going there and how I was looking at things. All right, so let's hit save and new here. I accidentally left this checked, so let's uncheck that and then hit save and new. Go back to our chart. The next one is going to be lease expenses with two sub accounts, rent and repairs and maintenance. So let's set that up. I'm gonna say go back. What is it? Lease expenses. Account type expenses. We're gonna call this rent or lease of buildings, and we're gonna make this a parent account. So we're gonna leave this checked. Can put in a description if you need, but we're gonna hit save and new. You're gonna say base rent, or you can just say rent that's paid. We did not name that rent, we called it lease expense. All right, so have that one set up. Let's hit to save and new. Then I'm going to say repairs and maintenance. Also, you can type and if you want, but I just really like using this for some reason. I've gotten super used to it. I'm going to select the parent account of lease expenses. I'm going to hit save and new. Uncheck that up sub account box so we don't get confused later. Dues and subscriptions, we got four more. Let's get them done. Dues and subscriptions. And we have an account for that. Or a detail, sorry, for that. Office supplies. Office in general, administrative. Payroll wages paid. Wage expenses. Last one is interest expense. Now, in some, you might want to put this in an other expense so it categorizes it out. And I'd like to do this here just so that we can holistically see the income statement. But if it's as an expense, it doesn't matter either way. It just kind of depends on how you like to see your report. I like to see it under other expense. So if you're setting it up for the first time, I like to show interest at the very bottom. I'm going to hit other expense and we're going to look down here and we are going to put it under other miscellaneous expense because I don't really see exactly the one that I have. Now, under expense, there was one called finance charges. And if you wanted to keep it within the core, you could put it there. I think that's a good place to put it. But I'm going to put it under other expense and other miscellaneous expense. And since that's the last one, I'm going to hit save for now. So now if we review what we have here, you'll see that we have a profit and loss kind of built out from front to end. It organizes it starting at the sales level. So we'll see cafe sales, merchandise sales, a couple of our default accounts. If you try to archive these, some of them will go away, some of them won't. So I try to just ignore them. Then you'll see all of our cost of goods sold organized here. And then you'll see all of our OPEX with our interest at the very end. All right, so next we need to do our balance sheet setup. Okay, so Chase Bank is already set up, obviously. And I'm just going to walk you through setting these up again, okay? Because I think at the end of the day, if they're set up, you understand how to just input them. Right now, you might not know which accounts to select and how to build one out yourself. But if you were to go back and look at this and you were to ask ChatGPT, you would kind of understand how to put everything in place. Or if you were seeing a QuickBooks that you're taking over, putting into transactions and things like that, you would kind of understand where everything falls based on this chart right here. So that's the whole point of this chart. It's not to teach you what all of these are, it's to kind of show you what might end up in these categories. So let's get set up on the balance sheet as well. We're going to start with their assets. Chase Bank is already set up here. So we have to do lease deposit. So let's come over here, hit new, type in lease deposit. Going to do other assets, and you'll see security deposits because a lease deposit essentially in most commercial real estate leases that you're going to sign is at least 1 month down as a security deposit when you sign the lease. So we're just going to do this and hit save. Get our new one set up next. Next one is going to be some of our fixed assets, equipment, furniture, and signage. So we can either just have them all as parent accounts. We don't have to really set them up as this full like waterfall. So let's just set them up as parent accounts and go from there. So the first one is equipment, fixed assets, machinery and equipment. Let's save. And you'll notice that I'm skipping over some of these items like starting value or purchased value. We'll see this in a second here. So let's do furniture. Again, fixed assets. You'll see fixed asset furniture. You'll see there's an original cost as of date. You can kind of ignore this for now because we're setting up a very fresh QuickBooks. This would be if you were doing a lot of retroactive bookkeeping, which obviously right now we will be doing because it's books from 2022 to 2023. But again, we're starting from as if it was fresh. You just got this set and we're going from the very beginning. So we don't have to worry about these specific boxes here. Hit save and new. We have one more asset, which is signage. And then let's just look at if we have anything that's related to signage, which I don't see. So I'm going to set this into furniture and fixtures just because to me, a sign is a fixture, whether it's on the wall, whether it's posted outside, it can be a fixture. So I'm going to leave it there. Alrighty, so now we have our liabilities. There's a Chase loan liability and sales tax payable. So let's look through here and just make sure we don't have a liability for sales tax because typically there will be. So what we can do is we can search real quick, sales. Does not look like there's a sales tax liability account, so let's hit new. Sales tax liability. I'm gonna go into other current liabilities because this is something that you will typically pay on a monthly or quarterly basis. And if you look at the detail type, we have sales tax payable right here. Again, don't need an open to balance. As of right now, there's nothing owed. Save and new. And we have a Chase loan. So what we're going to do is we're going to say Chase loan. We're going to put this under long-term liabilities because long-term liabilities are anything that's due over more than a course of a year. In very basic terms, don't quote me on this. If you're a CPA, don't get mad at me. Long-term liabilities are anything that is paid off over the course of a year, and short-term are anything that needs to be paid within the next 12 months or shorter. And here you'll see notes payable, long-term liabilities, shareholder notes. Notes payable is a good way to put this because you're paying down a note over time. And then we can hit save. So let's take away the search so that we can see all of our accounts again. The last ones are equity, right? So this one probably is the one that's a little bit more confusing than the rest of them. All the names kind of are straightforward and makes sense up until this point. But equity is the one that kind of, doesn't have a straightforward explanation. So what are contributions and distributions? Contributions are cash that the owner is putting into the business bank account to fund it. So let's say you have to buy $20 worth of coffee beans, but your business bank account is zero, right? And you can't make money without buying those beans and selling the coffee. So the owner has to put in $1,000 to start, let's say, right? So we're going to say that's a contribution. What is a distribution? A distribution isn't just whenever you pay yourself, right? Because if the opposite of putting money in to the account is a contribution, the opposite would taking money out. But there's a clear distinction between a distribution of profits and what somebody pays themselves for being there, right? So you have to imagine from a business owner's perspective. And again, this is more of just holistically trying to explain what's going on. But you will, if you were running a cafe as a manager and you had to pay someone to be there for $20 an hour, then theoretically you're able to pay yourself a fair wage of $20 an hour at the same time. So you would want to categorize what you're worth in terms of the market, in terms of payroll wages paid here, and then any profits you take out outside of your regular paychecks, that's a distribution. Again, we'll go through this in more detail as we go through our examples. I really like being able to do transactional examples to be able to understand all of this. But let's go ahead and finish up setting these equity accounts, and this will be a parent and two children accounts. So we're going to set up a owner equity account. You're going to scroll down, you'll see equity, and here you can see partner contributions or distributions. And then you can hit save, new, contributions. We're going to set this to be save and new partner distributions. There we go. So now we have our, and how you'll see this actually organized is you have your assets, liabilities, equities. So your balance sheet comes first in the way that it organizes it, and then your income statement comes second. Income accounts your cost of goods sold and your expenses and your other expense at the bottom. All right, so we got our chart of accounts set up. It was a little bit painful. We went through really quickly. We got a bunch of accounts set up, but how do we use these accounts, right? So let's get into that in the next chapter. We're going to start by setting up our first month's worth of transactions, doing the transactions, and really understanding where they end up on the income statement and the balance sheet. All right. Okay. So let's get on to the next chapter. Alrighty. Chapter 3. This is where we start to really get into the weeds. We start to get working. We've got our framework set up. So let's start getting categorizing on our first transactions. Okay. So chapter 3 will cover categorizing the first months with the transactions and seeing where they all go and reviewing kind of our work for that 1 month. And we're going to reconcile our first month as well, make sure that we have the account balances all taken care of. And we'll be using some of those reference files for the first time in the Google Drive. So let's get started. We're going to go to our QuickBooks, and we just left off on setting up our chart of accounts. So let's go to transactions and bank transactions, and we're going to do our first set of transactions. Now, the first thing you want to do is it will by default give you the latest transactions. So flip this to where you see the oldest transactions, because to me, and in general, you can't really reconcile an account backwards. So you have to reconcile it from the oldest date towards the newest date. And one thing that, you'll see here is, oh my gosh, there's 938, there's so many transactions. This is
a 1 of 50 of 401, but there's actually that many. You see so many tabs. What I want you to do, and this is what I do when I work, is I go here and I set the month to be the month that I'm working in so that I feel like I'm really only doing a month at a time. So the first month is going to be July 2022. Let's hit apply. And wow, there are only 10 transactions in the first out of 12 months. And this is what I love. So the other thing that QuickBooks does is since if you have multiple transactions that post on the same date, they're going to look like you have a negative balance, like you spent money before you even had money in, right? So don't worry about this too much. I like to go by date, is a really good way to start. So we're going to start that way. Now we'll see that all of these here, and you can click on the first one. You can click on the first one, hold shift, and then click on the last one to be able to select multiple at a time. You can unselect multiple, never mind, cannot unselect multiple at a time. These first four transactions are all July 1st, right? So logically, let's say we have to have money in the account and before we spend any money, right? So let's look at these money in transactions first on the first. The first one says Chase transfer in. If you don't know what it is, you should either ask somebody that's, your boss, or you should ask the client that you're working for if you really don't know. But the best thing to do would be to, use your subjective thinking and really try to come up with an answer before you have a list of very menial transactions, right? Because right now there's only 10 in this month, but let's say out of 10 you had two. That means out of 1,000 transactions, you might have 100 questions for the owner, right? So we want to try to logically think through what these could be. And since we're thinking of this in the sense of business owners opening a cafe for the very first time, and like I said earlier, there has to be cash in the account before we start, right? So this is going to be an owner contribution. We're going to assume the owner is you. Let's say you're the one that's running this cafe. So I'm going to say Prithvi. I'm going to add new to this. And you'll see as a default, it'll say I'm a vendor, right? But if you click on this contact type, you'll see vendor or employee. So what I like to do here for the owner and the owner only most of the time is I'll set it as an employee because the rest will be set up differently. We hit Prithvi, JBTC, and you don't have to really put the rest of this in. Again, it's for tracking purposes at a really high level. If it's required of you, please do put it in. But for the purpose of this exercise, we won't have to. So I'm going to save this. So Prithvi JPTC is the owner. And the account this is going to is the contributions, because again, this is a contribution of cash to be able to start spending the money and start getting everything in, all right? We're going to hit add. So now that we have 15,000 in the bank account that we've categorized, and real quick, before I go into the rest of these, let's see how we see that, right? Let's go to reports. And again, I think everything starts on the profit and loss, right? So let's click on the profit and loss and make sure, because unfortunately we have 2022 transactions, make sure we are looking at 2022. So to look at a full year, you would start with January 1st and we would end with December 31st, and then we'll hit the run report. You'll still see that there's no data in here. So before we freak out and we think that we did something wrong, let's go back to reports and let's go to balance sheet and see if it exists there. And magically now we start to see, oh wow, there's 15,000 on the bank account and there's contributions of 15,000 as well. Now you'll see that this is for 2024 and it's still showing up now. And we'll kind of get into that why that happens later. But for now, even if you were to switch this to 1/1/2022 to 12/31/2022, you will see that we have the same values. So your balance sheet will still have those values in it. So now we know, oh, a contribution ends up hitting your balance sheet on the bank account and the equity side. Why? Let's not worry about that for now, and let's move on to the next one. Let's say you accidentally picked a different account here and you hit accept. How do you go back and fix that? You can go to categorized. You can click on this description checkbox, hit undo. You can go back and it'll be there as if you never did anything with it. So let's go through and let's get everything categorized for July. And let's, talk about why we're categorizing things in certain places. So we're going to pick July as a month that I want to see exclusively. So I feel like I only have 10 transactions to do. Let's put this one back in. Prithvi. I'm going to say contributions. I'm going to hit add. All right. So here we have something called chase payment to landlord. We don't even know what it's for. The memo only says that. And sometimes in these situations, if you don't have these documents, you should ask for them. So the lease payment is going to be really helpful to go and look at the landlord sublease agreement. So let's double click on this PDF and let's read through it real quick. You can read through here. You can see, obviously, this is a sample generated, but if you read through this, you'll see that the lease commences on July 1st, 2022, and ends on June 30th, 2024. So maybe this is a rent payment, right? And if we scroll down really quickly and we're not really thinking about it, oh, wow, there is a rent payment, but this is due for August 1st. So let's just keep reading through it real quick. Security deposit is collected from the tenant on July 1st, 2022 of 1,250. That matches exactly to what we're looking for. But let's just get a sense real quick of what this lease is going to look like, right? So looks like we sent a $1,250 deposit on the first. And then if we look at the rent schedule, free rent is provided for July 2022, so there's no rent. And then starting August 1st, we're going to have 1250 rent, which looks correct here. Then, according to the sublease, every 6 months, we're going to have a rent increase by 160, which is shown in the table, right? And then we have some other just generic termination clauses and other things at the bottom. So this table will be really helpful for us understanding what the amounts that we're paying to the landlord really are and if they match or not, right? So part of a good bookkeeper is being able to see if there's a discrepancy. Maybe we underpaid, so we should make sure we get paid up on the true balance before it becomes a problem. Or maybe we overpaid and we need to, collect that balance back. But either way, now we know the reason for the 1,250 that was spent on July 1st. So remember, we're going to put in landlord here. And what you can do is if the landlord has an LLC name that you're paying to, that would be the best thing to put in. So what I'm actually going to do is I'm going to say landlord LLC because typically that's what a landlord is going to look like. And you can hit save and you can put in all their information if you'd like. This was security deposit, so we're going to look for our deposit, lease deposit. We're going to add that in. All right. The next one, it says loan Chase Bank, and we received $7,500. So think about it. If you've ever taken a personal loan or, however that part works, you would be taking out a loan and you would be getting cash, right? So let's just quickly go over here to our documents again and just see if we have anything before we try to figure out what this is for. We see there's a loan amortization schedule. Let's click it in. So the amortization schedule kind of shows you the payments. If we go here and if we add 730934 plus this principal payment of 190.66, you'll see that the original balance of the loan was 7,500. So we borrowed 7,500 to, assist in the cafe cash flow. So we're going to say Chase Bank because Chase Bank is a person that we are getting the loan from. Hit save. And we're going to pick the loan liability account. Then we'll just hit add. Again, if you have questions about why we're doing it this way, again, I think part of it is doing it and understanding it, looking at the balance sheet and seeing how it all goes in. But also feel free to send a message on the community. I'm happy to jump on and help you understand why we do things in a certain way and what the overall theory or the explanation or reasoning behind it is. So Vistaprint is the next one. And so Vistaprint is obviously, if we look it up, and this is something we do as a bookkeeper a lot. If we click on Vistaprint, we'll see this is for a bunch of different things. It could be for business cards, but it looks like it's for merchandise, right? So we're going to book it as a merchandise. Merchandise purchase. Austin Branding Company. So this, if we search it up, probably not going to get much, but Austin Branding Company is obviously for advertising. That's how I set it up, at least in my head. So we're going to look for advertising and we're going to hit that as an expense. Central Insurance Agency. So obviously every business is going to be liability insurance. So we're going to put Central Insurance. We're going to put this under insurance expense under the utility sub. Then we're going to see, oh, there's a coffee machine supply spent for 7,500, right? So really, we're thinking about that loan that we took out was purely for the coffee machine account, right? But this is a equipment piece. So let's add our vendor here, coffee machine supply, save. We look over our equipment account as we purchased this equipment. Furniture Mart. So we're gonna say Furniture Mart. And we're gonna throw it into the furniture asset. Austin Signs and Boards. And with a little bit of educated guessing, we can think that is signage. The last transaction of all of July is a Webster on store, right? We spent 748 here. So I know there's an account called Small Tools and Kitchen Supplies, but what we're going to assume here, right, is there's no sales yet. This cafe hasn't opened yet. So we're setting up either it's glasses or, it could be like different things that you'll need within a cafe. But overall, what you might be buying from the web restaurant store, if it isn't specifically equipment, is probably going to be small tools and supplies. Here, we're going to do small kitchen tools and supplies, and we're going to choose to expense this rather than putting it as fixed because the idea is, and again, if you really wanted to dial into this, you could go and pull the invoice and really split the whole thing up. But we're trying to look at this as a holistic, quick way to do everything, right? And if we try to look this in a holistic way, really anything we buy from the web store is most likely either a consumable or something that's too small to want to set as a fixed asset. If that last statement didn't make too much sense, it's okay. Again, a lot of this is let's do it first and we'll understand how everything comes together later. So this is going to be small kitchen tools and supplies. So let's hit add and we've taken care of everything that's in the date range of July 2022. Now, let's take a look at our reports and see how our income statement and our balance sheet both look now. Let's go to our reports tab. And let's go to our profit loss again. We're going to have to go 7/1/2022 to 7/31/2022 to look at our July transactions that we've categorized. We're going to see, oh, we have a negative net income. Starts with merchandise that we purchased as the cost of goods sold. And then we have our advertising expense and our small kitchen tools and supplies and our insurance expense that we got set up. The first month, we were 1,946 negative in our profit, but that doesn't truly encompass all of the money we spent, right? So where is that rest of that money? So we go back to balance reports, we go to balance sheet, and we'll see that our cash balance is actually $8,803. So there is cash that's gone out, but now we can see there's equipment that we've purchased, which is from the loan money, and that loan money is down here. And then we have furniture that we've purchased, and we have signage that's purchased. Now, why this is on the balance sheet is different than why it goes on the expense, but the really short and quick way to think about it is the furniture is something that I don't plan to replace unless it really breaks, right? But let's say a milk jug that I'm steaming milk in, maybe I'd want to replace that every 6 months. Just, I like to have clean new designs or in terms of how the cup looks, or I have, a cleanliness thing, and I just like to, make sure I'm rotating them. So anything that I see, like signage, if I buy a sign, I'm not going to be swapping it out every 6 months. I'm going to leave that there until either it's worn out or I really think we need a new sign to bring in new business. But, the sign that I bought for now, at least for the foreseeable future, is going to be the sign. So that's where I think the difference between is it an asset or is it not an asset, and is it more of an expense? That's where that comes in. Again, you'll see contributions. Here in the retained earnings, you'll see a 1,946.30, and the reason that's in retained earnings is because we didn't switch our dates. We go 7/1/2022 to 7/31/2022. That will show up in net income because now we're in the current year. So that's kind of a good example of why 2024 is going to look different from 2022. Retained earnings is anything that's happening outside of the period, past periods, which means if I'm looking at January 1st, 2023, this net income, if that was all that happened in 2022, would be in retained earnings, and net income would be zero if no transactions have happened on the first. Again, I'm trying to just holistically tell you if you're taking notes, it might be good to physically write it out so that it'll connect to you later. But again, this is all to help you connect to stuff later. So the last thing we need to do in this whole list is reconcile our account, right? We've reached the end of July 31st in terms of all the transactions. Let's verify that everything is correct and done right, and then let's move on to the next month. What we're going to do is we're going to go to transactions. I'm going to go to reconcile. And the first time we do a reconciliation, you'll start to kind of understand what a rec is and how it works. So let's say get started. You can just click the X button here to kind of skip a lot of this stuff. So it's asking what account do you want to reconcile, and we really only have one bank account to reconcile, which is a Chase Bank. You can reconcile other accounts as well, but for now in this exercise, we're only going to be reconciling the bank account. There, you can reconcile credit card accounts, you can reconcile loan accounts, you can reconcile anything theoretically, as long as you have a list of transactions to get against it. But let's do this one so you kind of understand what I'm talking about. So obviously here it says beginning balance is zero, which we know because we opened a fresh bank account. So the beginning balance is zero. If it's not, send me a message on the community. Let's figure it out together if it's your specific example that you're looking at in your own day-to-day life. But for now, this beginning balance is zero, and it's asking for a statement ending balance. So let's go to our documents on the drive, and you'll see we have Chase Bank checking statements. Now, theoretically, you would have a separate PDF for every single month, but this is a kind of consolidated PDF. So you'll see this is the bank statement for 2022 July. So the opening balance is zero, which is correct here. And our closing balance is 8,803.70. So we're going to put 8,800. And I have a short-term memory, so I need to go back and look at what that number was. 3 cents, $3.70. I'm going to check that just one more time. Yep, okay. And our ending date is obviously going to be the end of the month, which is 7/31/2022. Now you got all this information in. Let's hit start reconciling. I'm going to hit don't show this message again, don't show this message again, because it's basically just showing you these things. You'll see when you first start everything, it'll say $0 difference, cleared, finish now, everything is checked because everything is correct. But if we uncheck this, this is kind of how it'll look, right? So the way that the reconcile is what's your ending balance, and do all of the transactions that you have in your books match to your statement? So did you categorize everything is mainly what it's looking for. But let's say you're doing some more advanced stuff like journal entries, or you have some other things and you've accidentally put something into the bank transactions. Catching mistakes is also a really good way, a really good result of doing a bank rec. So if we were to go through date by date and we were to say, okay, yes, the loan was deposited, yes, the contributions are made, go through and we select every transaction in July, you'll see that we have categorized everything and we have wholly encompassed the bank balance without any excess dollars or any, you know, not excess dollars. We're not missing anything. I'll go into the reconcile a little bit more in the next chapter where we go through and we figure out the next month how to kind of automate some of the stuff in the month and being able to. So once you know that you have a $0 difference and you have all the transactions selected, you'll essentially know you don't have any excess transactions or any transactions that you're missing because what you've categorized matches up to the bank balance. So we're going to hit finish now, and we're going to hit done. And that is our first month. Congratulations. You have done 1 month of bookkeeping so far. We have 11 more to go. So join me in chapter 4, and we'll get started on getting further and further into getting this set of books ready to go and ready to review for the full year worth of transactions. Okay, so let's get started. Our first transaction looks like it is for Chase Bank. So let's type in Chase Bank. And we see it's for $15. This is really typical of an ACH or a wire fee from some banks. And this is why we have a bank fee and processor fees um, category. So we're going to go ahead and hit add there. You see this is a Chase payment for 228.16. This is a number that's obviously not just like a flat fee. So let's go to our documents and see if we can find anything. And if you remember, we took out that loan. That's a, it looks like it's a 3-year repayment with 228.16 per month. So we're going to learn how to do this transaction at the end of this video because I want to kind of go through the rest of it first, and then we can come back to this. So we're going to leave this for now. The Chase payment to landlord on the first, so they're paying rent. Also utilities company, so we're going to look this up. And if you don't have any of these vendors already in, obviously add them. And you can name them how you feel. So here I named it Austin Utilities, but you can put the co in if you'd like. And let's say I kind of just blazed through that and didn't realize what exactly I had just categorized it as because it had suggested something rather than me giving it something. So let's just double check to make sure it put it in the right category that I wanted it to. Western utilities. Okay, so see here, I accidentally put it to billable expense income, so I'm going to hit undo. Or you can edit it from here, but I like undoing it so that you have like the peace of mind that you did it properly. So Austin Utilities. I'm going to make sure I put it under utilities there, and I'm going to put it under water and electricity. Central insurance, you'll see that it's suggesting a match here, and this is exactly what I need it to be. So I'll add my vendor. I can double check that it's under the right parent account, and then I can hit add. Office Depot. It's going to be some office supplies here. And remember, if you're having a little bit of trouble figuring out, you know, what's in this whole drop down list of possible accounts, you can always go back and look at our chart here on this slide 7 to be able to kind of remember what are your options if you want to see it visually. So IKEA, we're going to also book this to office supplies. And this is because it's a small amount. If it's not over like $1,000, then you're probably spending it on pretty small things. If you want to get the receipt and really understand what it is, then we'll learn how to split that payment with this Chase payment and the loan payment. You can get a little more granular with it, but for the purposes of this course, we're going to keep it simple, and most of our transactions are going to be single category. So IKEA is going to be office supplies here. We have something called voltage coffee. So let's do a Google search of what voltage coffee is. They are a specialty coffee roaster. So we're going to put in voltage coffee. Coffee beans and supply costs. Okay, so here's one of those situations where either we need the receipts to know what these are, or if you're the owner doing your own books and oh, these three Amazon are for like random office supplies or things that you needed, and this 212 was for kitchen supplies that you were buying for your cafe, we can do a batch categorization here where we select all three, hit edit, expense, Amazon, and these are office supplies. So we're going to select office supplies and we're going to apply an accept on those three. Then on this one, because we know this is small kitchen tools and supplies, we can set it out as small kitchen tools and supplies. Home Depot is going to generally be for repairs and maintenance. So let's say, they just opened, so we're going to want to add some paint and do some renovations quickly to the areas that they think is worthwhile, or adding some shelves into the side of the area. So we're just going to put this in repairs and maintenance. Again, we have voltage coffee. Home Depot again. And again, I'm very used to how QuickBooks looks, so always double check if you need to. Amazon office supplies looks good to me. IKEA office supplies. And remember, you're probably not going to see a lot of these, IKEA and things like that as you keep going through the months, because when we're first getting set up, let's say for the first week or two, we're just running around and getting what we need and realizing we need something, right? So HEB, if you don't know what HEB is one of the greatest grocery stores in the United States. And so now that we know it's a grocery store, I'm going to say HEB, say grocery, dairy and grocery cost. We have Office Depot here again. Okay, so Office Depot, office supplies, Target. Let's say the owner or you, the owner, said, I know I was buying some kitchen things, so I'm going to put them in kitchen tools and supplies. Whole Foods, everybody knows what that is. And since this is a grocery store, we're also gonna put it in dairy and grocery cost. A Smart, again, if you don't know what it is, we can Google it real quick. It's a restaurant supply. So these are gonna be small kitchen tools and supplies. Central Market, it's starting to categorize them correctly for us, but for some reason, it's a little more time before it can give us the payee in there as well. We're going to select dairy and grocery for this one. Deep maintenance. Okay, so we have Square, and shows that we're receiving money here. So it looks like the cafe is finally open for business. Okay, so let's go ahead and set up Square. The reason we're going to set it up this way is because these deposits are, each day. It's not per customer. So there's no need to track a lot of this. A lot of this stuff, especially in restaurants, will be tracked in the software that they're using, whether it's, for this example, it would be Square. A lot of restaurants use Toast. The platform that you use is generally going to be tracking a lot of the relevant information you have. So here it's defaulting to its sales account. And remember, we set up a cafe sales. Um, this cafe sales account. So we're going to put it in cafe sales and we're going to hit add. So creature coffee, looks like this is again a coffee bean supply purchase. Okay, so we're getting to the point where there's a lot of repeating transactions, right? So I want to go over setting up some rules, and rules will be really helpful, especially as we get into the next couple months. And I'll show you why this starts to get less and less daunting, especially for a business that is a clean, keeping their transactions in their own business account, their personal transactions separate. And let me show you how the rules work now. So for rules, what I like to do is I like to set it up completely, right? So HEB, dairy, and grocery costs. I have the vendor and the account correctly set up, and then I click create a rule. And when you name the rule, I like to just name it simply HEB. And what you really want to know is how you're going to be able to find it. So you want to make sure you're not accidentally. So when I set up rules, sometimes I'll set them up super generically, but you have to make sure you don't accidentally just accept every transaction because it has a rule. So we'll go over how to kind of bulk accept rules and just review them real quick and make sure that they're right and put them in. But for now, it looks like everything, because I set it up properly in the original screen before this kind of comes out pre-filled pretty properly. We just need to check the payee and the categories are correct. Sometimes it flips them up on you. We can test it and see how many transactions. It says 77, which is across all of our dates, not just the month that we're in right now, which is great, right? So like it'll really help us get these transactions cleaned up really quickly. So in the rules, there's this checkbox that you have to click before you hit save. So make sure you uncheck that because what it'll do is it'll automatically add it for you and categorize it. Where if you're really confident that the description, the rules that you've set up are really strong and match exactly what you have, because you can even set up, it has to be an exact amount. So we could actually set up a rule for the loan payments in the future. But for now, we really just want to stick to description and leaving this auto add unchecked so that we can really review everything properly before we put it in. Let's hit save and go back to our transactions. If you want to edit a rule, you can go to the rules and you can see the rule name that you've set and you can click edit and we'll get back to that exact same rule here. So now you'll see that, and let me real quick, since we left that, we need to reset our date range. You'll see that we have a rule that's set up and it looks like the payee isn't set, but with the rule, it is setting it. It's just a visual glitch. So what you can do is go ahead and in the month that we have, go ahead and select the rest of the HEBs that exist, right? And we can hit accept since they're all rules now. And we know that we looked at each one. We know that they are HEB in the description that's coming from the bank. And if it's the rule, it's going to set the payee for us and get it squared away. Speaking of squared away, we're going to square away square. We're going to set up cafe sales here because these square deposits will be very regular and we want to be able to really knock these out as they come in. Description contains square. And test the rule. We know everything's set up here correctly. We're going to make sure auto add is not selected. And you can see this is a bulk of the transactions because, after every single day, we'll get a deposit of sales unless it's a Sunday. Perfect. We have a lot more of these rules that we can now just quickly make sure that they're square and accept these. Go ahead and accept. All right, so the next one is Waterfall Gourmet Beverage. So if we look this up, you can see distributed gourmet coffee supplies, products, and equipment. And so we're going to put this into Waterfall. So Waterfall does gourmet coffee supplies, product, and equipment. And so what I know as an owner, or if you were to ask the owner what it was for, they would say, "Oh, I'm buying my paper cups from there." So we can put paper, cups, and goods here. And now let's say we know this is going to be a recurring transaction. We can hit create a rule, and you'll see that this description is pretty long that it's trying to pull in, right? It's trying to really match everything. So what we can do is we can just shave it down a little bit. We can shave it down a little bit and make it to where it's just, the core front of it. So we know that this is going to be, just in case there's another thing that ever comes up in waterfall. We can test this rule. Looks like it applies to 52 unreviewed transactions. Make sure it's unchecked. Payee is correct, category is correct, and we're going to hit save. So what we can do is keep going rule one by one and kind of setting up rules for it, or you can set them up like each at a time and then knock them all out as you go, right? Accept those. Amazon, we're going to say is office supplies again. And remember, when you have these types of office supplies, they can be anything from stickers to markers to whatever they might be using in the cafe. A lot of times they're just things that help you move or things that customers like that you give away as freebies that are just worth it because they're so cheap to you as an owner. And let's go ahead and set up a rule for this so we can get these out of the way easier. To test this rule, 67 more transactions. So you can see how as we set up rules, this number becomes a lot less daunting because there's 67 Amazon ruled transactions that'll come up in this number at some point. 57 for the other one, etc. Whole Foods, we know this is dairy and grocery. Save. Figure 8 coffee. It's pretty explanatory, but specialty roasted coffee. So we can go back here, add figure 8 coffee. And supply cost. We can create a rule. And let's say this is a one-off. You don't have to create a rule if you know it's a one-off, right? But for me, anything that could be a repeatable, especially when you're doing such a big bulk of transactions like 850, it helps to set some up just to understand where um, either if the rule is going to be worthwhile or if it's not going to be, because you can test the rule and see if it's there. And sometimes just going that extra step really helps you possibly save a lot of time. Repairs and maintenance. And maybe this isn't repairs and maintenance. Maybe this would go under advertising. Again, you don't know unless you ask the owner, right? And so in my case, let's say I just have a constantly leaky something and I'm having to fix it. I didn't get a great lease. And so I'm having to deal with a bunch of little things every now and then. You can create a rule. Home Depot, expenses, repair and maintenance, and save. Target, small kitchen tools and supplies. Create rule. Check your categories, check your payee. And again, if you think these rules don't fit for every single thing, even if they don't fit 100% of them, if they fit 90% of them, sometimes it's worth having them because you can either go back and recategorize something that got a receipt for and it wasn't the normal thing that it usually is, or you can review all of these kind of and just have these rules set up to like quickly go because you can always come in and set this to be office supplies if it really was office supplies. But usually, if they're going to be small kitchen tools supplies, you can leave the rule like that and it'll keep the rule as if it's small kitchen tools and supplies. So we're coming up to the end and we have a few of the last things that we need to consider. Let's accept these rules. We have another Chase Bank fee, looks like. Bank and processor fees. I'm going to hit add here. And so these are the three payments that we're going to look at that are a little bit first time for us. Easy Ice, if we look it up, they're actually commercial ice machine rentals. So this is an equipment rental. So Easy Ice, especially if this is a rental, we know that sorry, I can't speak and type. We know that it's going to be a recurring transaction almost every single month because we're renting this equipment, right? So we can test this rule and see how many exist. And yeah, it looks like there's one for every single month. So we're going to hit save, and we have a rule for the equipment rental. And this is a transfer of $5,000. Now, let's say you're the owner and you know, but the owner is paying themselves, right? For the time that they're spending in the cafe, running the business and doing everything that's needed. Let's say that the owner has decided they're going to have to pay themselves $5,000 a month to be able to pay all their bills personally in life. And so that's the goal. The business should at least produce 5,000 a month, and they have enough cash in the account to pay themselves 5,000 at the end of this month. So we're going to go ahead and categorize this, and the owner is you, or whoever you've chosen the name for. And this is where we talked earlier about. So this is where we talked earlier about the difference between distributions and payroll wages paid. This is payroll wages paid because the you as an owner are spending time setting this up, spending time at the cafe, and really doing everything. So your 5,000 a month is for all the hours that you've spent in the business and paying yourself a fair wage to be there. So we're going to hit add. And the last thing we're going to go over is this Chase loan payment. Again, so this Chase loan payment, if we go back to the drive, we're going to see that the payment amount is 228.16, and it's split into interest and it's split into principal, right? So if we go here, if it's split into interest and principal, again, we're picking Chase Bank because they're the person that gave us the loan. We pick interest expense. It's not the full 228, right? So what we're going to do is we're going to go down here to split. We're going to make sure that the paid to is still at Chase Bank. We're going to make sure the category is interest expense. Here, I like to put interest payment. And then here, principal payment. So the interest payment, to keep this simple, is going to go into the interest payment box, 3750. So what do we do for the principal payment? We're paying down the loan with the rest of the balance. So we're going to choose the actual loan account, and we're going to put the rest of the balance towards the loan account, which is 190.66. You'll see now this matches up to the original transaction amount. So we know that we did the math, we didn't do any typos here. And so what we can do is apply and accept. What this is doing is it's splitting the transaction of the payment of 228 into its respective categories, which is an interest expense and the principal pay down. We hit apply and accept. Okay, so now that we've categorized all of August transactions, we're going to go to the reports and we're going to look at the profit and loss and see how our work kind of impacted the reports. And this is a good way to check our work and see if anything has landed in the wrong spot. We're going to see cafe sales. We're going to see our cost of goods sold. So it looks like, from our core costs of running and producing coffee, we made $1,000 in August. Again, we started in the middle of the month too. Our sales weren't consistent just yet. So that's kind of where that's at. We have bank and processor fees. We have our rent payment. We have our wages that we paid, insurance, utilities, our interest expense. So our interest expense exists here on the income statement, right? So where does a principal exist? If the interest expense is on the income statement side, principal is going to exist on the liability side on the balance sheet. So let's take a look at the balance sheet real quick as well. And we're going to set our date to 8/1/22, 8/31/22. And if we run a report, we'll see that we have about 2,000 left in the bank account after the end of the month, paying ourselves, paying rent, everything. Um, and we have equipment, we have furniture, we have signage, and our lease deposit. We have equipment, furniture, signage, our lease deposit. These all don't change because we haven't really put any other money into these just yet. And here on the Chase loan side, you'll see where that number really comes down. It will be by the principal. So it was 7,500 before, and we paid down 190.66. So our new loan balance is now this 7,309.34. You'll see our net income so far, because of all the money we've put into spending and getting everything set up, is negative 8,568. But again, we're in the first 2 months of the business, right? So let's say we want to holistically look at this from the start of the business, just within the first 2 months. We're going to do July 1st to August 31st, 22. If we run a report, we can see where that negative 8,568 comes from. We had a lot more advertising expenses. We had um, more setup costs here. You see that gross profit came down from 1,000 to almost 400. So you can see kind of where that margin starts to build on the opening costs from the beginning. And we'll kind of get into how that transforms over time. If you wanted to look at this a little more granularly, you can look at this by displaying it by months and run the same report. And you can see July was a total impact of negative 1,096, and August had a total impact of negative 6,600. So this is also a good way to generate reports and see how things are going month to month, being able to see, oh, well, looks like in certain months the sales kind of dip, or the certain months they rise. Summer versus winter is a good example. And so this is the profit and loss. You can do the same with the balance sheet and kind of see how they change period to period. So if we were to do 7/1/22 to 8/31/22, and then do by months and hit run report, you can see how the bank account changes balance from 8,800 to almost 2 grand. These did not change over periods. The loan went down by 100, and here you can see your net income is decreased. So that's kind of reviewing your balance sheet and your income statement. Um, what we're going to do is go ahead and reconcile our month real quick. So let's go to our documents, Chase Bank's checking statements. We're going to go to August. The opening balance is this right here. So I'm going to copy that, and let's just paste it here to make sure it's right. Yep, looks like it's right. And again, it should be correct if if you had set up and you did your rec from the last one, you're setting your opening balance for the next one. So we're going to paste that statement balance, and QuickBooks gets a little picky on the formatting. So we're going to paste the statement ending balance, and that's going to be for August 31st, 2022. Hit start. And again, it'll automatically check it. If everything kind of looks good to QuickBooks, it'll go ahead and check it. But you can go through the process of making sure you recheck everything if you'd like to. But with a $0 difference, and we know we did all the transactions correctly, this is good to go for my opinion. So we can hit finish now, finish our rec, and we're done with August 2022. So I'm going to jump in on the next video, kind of using the rules and the batch categorization a little more efficiently, and trying to burn through a couple months at a time. So in the next video, we'll probably do a couple more months, 2 or 3 of them at a time, and try to get through chapter 4 a little quickly. Again, a lot of this is about practice and getting the rhythm of what you're doing and the understanding. And so if you feel comfortable trying to do a whole month on your own without watching the video, I highly recommend you to do that. When we get to chapter 5, a lot of it will be more of, I want you to do it first and then use the video to check, because now you have all the tools that you need to be able to really do the work that we're doing here. And so at the end of the day, there's the community. If you really have questions and you don't understand why something's working, if you really want to understand the mentality behind something, please feel free to ask questions at any stage of the course that you're at. But yeah, I'll see you in the next video where we go ahead and knock out a couple more months together. So let's just get started. I'm going to go to bank transactions. And so we're going to be doing September. So we'll be doing September through January books, but again, I always like to reconcile month by month, to make sure that every single month is good to go before I decide to move on. So I'm going to go ahead and type in September, as that's the next. Alrighty, so we have our first Chase payment here, and we can go to our documents, amortization schedule. Payment date is 9/1, so this is the 9/1 payment, and it is 36.55 in interest, and the rest is going towards principal. So we can go to our bank transactions, type in Chase Bank as our vendor, type in split, interest expense, and then we're going to pick our loan account here as well. 36.55. Alrighty. And our difference is 0, checks out. If let's say you didn't have it at 0, it won't let you apply it. So just keep that in mind. Chase payment to landlord. This one is good as well. But obviously, see, even though it's green and it thinks for some reason it's suggesting this is a match, we need to make sure that we're setting it up correctly. So this is going to be rent. Okay, so the next one we have here is dry signs. So we can look this up real quick and see I already Googled it out of curiosity. So just by what I'm seeing, it seems like this is one of those signs that you buy to put into the, restroom to remind employees to wash their hands after they use a restroom. So we're gonna go ahead and put dry signs in. And we can add an account here if we really think we don't have one, but let's go back and just see if we can find an account that makes sense to us in the operating expenses. Advertising, it's not really advertising, right? Small kitchen tools and supplies, insurance, electric, water, bank processor fees, dues and subscriptions, office supplies, payroll, interest expense, repairs and maintenance might be an option. But here we're going to put this into office supplies as I think the best category for this because it's, not as if it can be put into signage fixed assets because it's not like a big sign. You probably, you know, imagine it's just a piece of paper that's formal or like framed. So we're going to put this into office supplies. And we have our first sales tax payment here on the 1st of September. So let's go ahead and select the Texas Comptroller of Texas. Oh, we already have a Comptroller of Texas. There we go. And then we put sales tax and we put sales tax liability in there. And so this is one of those transactions where I'd say, you know, we'll come back to this later, but this is how you would book a sales tax payment. You'd put it towards sales tax liability. And we're going to see that it looks weird on the balance sheet later. And I'm going to explain to you that we're going to wait until the end to figure out how to solve this. Because right now we're just focused on putting the transactions in the right account. So the sales tax due is going to be booked towards the sales tax liability account. And then you're going to hit add. Okay, so we have our first couple of rules. We can review these. Square, cafe sales, figure eight, coffee and bean supply costs. These look good. Like there was a Google expense. I'm going to type in Google. Let's add this vendor. And we're going to select dues and subscriptions. And the reason I'm selecting dues and subscriptions here is because the $2 wasn't for ad spend. It was probably for some type of subscription. Again, if you need to get the clarification, you can ask the client or you can figure it out yourself looking at a receipt. But dues and subscription is where I'd land this, unless you knew this was for like you were testing $2 in ads for some reason. Then you would put it in advertising. So then you have Square, Whole Foods, Austin Utilities, and it's suggesting the correct match. Central Insurance suggesting the correct match. So I'm going to go ahead and accept all four of these. Creature Coffee Co. And supply costs. We have that. Gonna have a good couple of matches here to burn through. Equipment rental, HEB, Square. Go ahead and select all of these. Accept these. Super thin coffee roasters. Save that vendor. Coffee and bean supplies was a good suggestion. Add that. Target, Whole Foods, those. ZTLLC. And if we look up ZTLLC just to double check what it could be, you'll see it's an organic company, organic tea company. So this is actually weirdly enough, this is going to be a coffee and beans and supply cost because it falls under the exact same category. So you can throw it under here. If you really wanted to create another line item, then you can. But let's say this is like a one-time purchase. They're just trying like a tea out. And unless the owner really wants to separate their tea income from their coffee income at that level, we don't need to do that. We just need to put it in the same category that matches what that spend was for. So the tea purchase will go here. Square, HEB dairy costs, cafe sales, those are all good. Gonna hit accept. Sixth Street Printing. So this is a printing company. And in this scenario, because we don't have employees, we're not going to assume this is like a uniform cost, right? We're going to assume this is merchandise cost, that they're buying merchandise to sell. And, in the context that you're the owner and you know that you spent money on merchandise here, you would pick that. If you needed to figure it out, you needed to make sure maybe it was for flyers or something like that, then maybe you would want to go and put it towards advertising. But in this case, I know that I'm buying merchandise that I'm going to sell. Where cafe sales, dairy and grocery costs, cafe sales, paper cups and goods, dairy and grocery cost. This is a correct suggestion. Okay, everything looks good here. So you can see that there's a Square transaction, but for some reason we had to spend $1.08. So what we're going to do is we're going to put this into bank and processor fees. This is a valid suggestion. And again, I review the rules just because it's good practice too, if you're really confident. Um, because a lot of these descriptions that are coming through are descriptions that I wrote up, right? So these are all very sanitized descriptions. And what you get from the bank statement is not going to look like that sometimes. So sometimes it's really hard to create rules that will consistently work. So it's always good to check your rules because sometimes if they're too broad, you can have issues where you're accidentally adding a transaction into a expense that you shouldn't be, into a category that you shouldn't be. Okay, so we have only 12 items left here, so I'm going to finish up the rules first so I can make this list feel a lot smaller. Looks good, looks good, looks good. We're going to accept these. Yelp, going to be advertising. Print Austin. Actually, yes, I can bulk edit these. Let's do that. And let's say these are flyers, right? I'm going to say these are flyers for what I purchased. So for Print Austin, we're going to say it's advertising. And Chase Transfer, this is something that we can set up as a rule because we know 5,000 is the monthly amount for now. If it changes, then obviously that rule would have to be updated or you'd have to create a new rule. But we know, and we want to kind of set some rules for the regular transactions that are going to happen. So we're going to say owner payment, labor payments. contains transfer. And what I'm going to do is I'm going to say the amount is $5,000 because I know not 50,000, 5,000. And we can test this rule and that matches. So every single month he's been paying himself 5,000. We've been paying ourselves 5,000. And we're going to say the payee is me. And the category is not rent, obviously. It's going to be wages for the payroll. So it's really good to check these before you just assume they're filled out correctly and move on. But yes, so this would be kind of the rule and the way we're going to set up. And we're going to hit save. And we're going to accept this. All right, so that's 1 out of the 5 months knocked out. Let's go to our documents, get our ending balance for September, which is 1,572. I always like copying and pasting because I can't seem to remember the number perfectly every time, and it's easier to copy paste than it is to constantly keep flipping back and forth between your two tabs. Okay, so we have our statement ending balance, and we did the month of September. So September 30th, 22 is the month that we're reconciling. Hit start. Looks like we're good to go. All of the transactions are selected. We can hit finish now. Alrighty, so we're going to go back to our transactions. We're going to go ahead and do 10, 1, 22, 2, 10, 31, 22. We're going to set our vendor as Chase Bank, and we're going to hit split. We'll put interest expense in our category. We'll go ahead and set this up before we go and get our amortization schedule to fill in the amounts. And you can say interest paid here, right? And then principal paid. To our amortization schedule, we will see the payment for October 1st will be $35.59, and that is our principal payment. Obviously, I did not remember that number correctly. It is $35.59. There we go. Alrighty, hit apply and accept. Got that one knocked out. All right, so we have our sales tax, and we can try to set up a rule here. And sales tax due. So let's test this rule because we know we're going to be paying sales tax every month, right? And here it says there's only 2 unreviewed transactions. So this is obviously not going to be the same name that happens every single time. So let's shave this down a little bit, see if this works. That doesn't seem it. Shave it down a little more. Looks like it'll apply to 11, which is right around, since we've already done a couple months, this is right around what we need it to be. So let's go ahead, check our expense, sales tax liability, controller, good to go, hit save. That way we got this done, right? Chase payment to landlord. We're going to put Chase, not Chase, sorry. The Chase payment to landlord is our landlord, LLC. And now I'm remembering, maybe I didn't do that correct last time. I think I might have accidentally put Chase Bank in there. Let's go ahead and book this to rent. And what I'm going to go do is categorized. I need to reset my date filter because I was looking at October only. And in the description, I know landlord is going to be in there. So, all right, just double check that my my payees are all landlord LLC. Good to go there. And what I'm going to do also here is, and this is, we're seeing all of the months here. So what I'd like to do real quick is go ahead and create a rule, landlord payments, because we know the description is going to say payment to landlord. And what we can do is, just in case, we can shave this down, test the rule, applies to 11, good to go. Lease expenses, rent, landlord LLC. Good to save that rule, right? And we have all of these. And I know it seems tempting to kind of accept all of these, and we can, but I want to do the first 6, 7 months with good practice before we get into doing things really quickly. So let's go ahead and reset our date range to 10/1/22, 10/31, 22, apply. I'm going to go ahead and accept this sales tax due. ESC Service Works Austin. Let's see what this is. So it looks like they're equipment repair. So we're going to go here. We're going to say CSC Service Works. And then here we can put repairs and maintenance. And what we can do is, yeah, this is what we can do is we can always check our list to see if there's anything that, could go into here that's better. And maybe if, these types of equipment repairs are pretty common, then maybe we create our own line item for it. But looks like this is a $2 charge, something menial for now. So we're going to just put it into repairs and maintenance. You're going to hit add. We have Google and the dues and subscription work because this looks like a monthly charge for something like Google Voice. Got a couple of rules here, which all look good. Yelp. You see how it picked it for a second. It had the right one there, but it for some reason doesn't want to do that anymore. We're going to go to Yelp advertising. Central Market, dairy costs, well, it's a good one is there. Easy Ice Equipment Rental, Square Sales, Amazon, Office Supplies, Central Market, Dairy and Grocery. These looks good. And then see this recommended one is just an uncategorized asset, so that one is bad, so we shouldn't accept that with its recommendation. And accept all of those, and then we should get to Chase Bank uncategorized asset. And it looks like it was a fee of $15, so it's going to go to bank and processor fees. We have our rule for our monthly payments to ourselves, paying ourselves for the time that we spend in the cafe. Sprouts. Dairy and grocery costs. Good to go there. Got a couple more rules to finish out. Good to go. We're going to go and reconcile. We can go ahead and say 1031.22 before we go and pull our balance. Go here and pull our balance for the end of October. So we'll go to the October bank statement here and pull this closing balance. Start reconciling. All of the transactions selected. Looks like we're good to go on the rec. Let's hit finish now, and we're going to move on. In the next month, which is 11/1. Forgot that that's that thing there. Okay. Chase payment, Chase Bank. Go ahead and hit split to interest expense, which is our principal. Go to our documents, find the transaction for November. The interest is 34.63. Zero difference, good to go. We have a rent payment here of 1,250, which is good. Sales tax payment, good. Square, which is good. Waterfall, paper goods and cups. Whole Foods, these are good. Let's go ahead and set up some rules here now. Because it seems like we'll be having Yelp pretty regularly. So let's create a rule. Yelp, Yelp, Yelp advertising expense. Test that rule. Good to go. Let's set up a rule for Google as well. Description contains Google. Let's test this. 10 and applied. And this is going to go under dues and subscriptions. Yeah. Make sure this auto add isn't checked. So let's save. All right. So now we have a new one that's receiving money and it's from Venmo. So the kind of so what we're going to do here is, as an owner, I'll kind of tell you what the story behind this transaction is. But if you don't know what it is, you kind of need backup for this, right? So if you have a Venmo and this is all it says, and typically when you do have a real bank transaction with Venmo, it looks very plain like this. It doesn't tell you all the details. It might tell you some of the details, but it won't tell you what it's for example, right? So you would need to, have reach out and get a screenshot of what the payment was for or understand what it was for so that you can accurately record it. But in this case, I'm going to say that I only sell merchandise through Venmo for whatever reason it might be, right? Maybe it's just easier that way. Maybe you know, let's say there's different tiers on the Square. So if you have too many products on Square, it forces you to upgrade to the next one. So it's easier to just sell on Venmo, if that makes sense. For whatever the reason is, Venmo, in the case of Prithvi, my cafe, is going to be for merchandise sales. So we're finally going to get to use the merchandise sales. And we're going to create a rule. If it's Venmo, then it's merch sales. Let's test this rule, see. There's 33 unreviewed transactions. We're good to go there. You can hit save. And so sometimes this payee doesn't populate. It's just a glitch. If you have a rule set up, it'll have the payee there. So let's review. These are good. It recommended a match for Austin Utilities last time, but now it's not. So let's go ahead and create a rule so that we can stop having to type it every time. Utilities. There we go. Everything looks good. Let's test this. 10 more. That's good. Once per month. Central Insurance Agency, also the same thing for some reason. Test that real quick just to make sure it looks good to go. Insurance. All right. Got a couple of monthly transactions now that we've got ruled. This is good, 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 good. Sixth Street Printing. Remember, this was merchandise that we bought before. Go. We go ahead and see if there's more transactions like this real quick. Two more, so not too many, but let's go ahead and add that merchandise purchase. Everything looks good. Central Market, dairy and grocery costs. Go ahead and create a rule. Test that. Yeah, that'll be very helpful in the future. All right. Now we got a lot of rules doing some work for us. Let's go ahead and set up a rule for this too. Here's maintenance. Save that. Wow, we got a whole 50 transactions worth of rules. So let's go through just real quick, scroll through. Yeah, and if you're paranoid, you can click in here and just check to make sure that it's giving you the vendor, which it is. All right, looks good. All 50 are good to go. We're going to hit accept. And then we have a bunch more of these. And another banking fee. Go ahead and hit add there. Keep looking through these. This one looks good. All right, all of these look good. Got November taken care of, so let's go and reconcile it. 30, not 31 days. What are documents, bank statements? Trying to find November. Okay, closing balance. Start reconciling. Alrighty, all of the transactions are selected. $0 difference. We're good to go. All right, we got a couple more months to power through. Let's just keep going through it and let's take care of this. And this is part of it, right? Part of it is literally learning how to take breaks, learning how to make your work more efficient. Because let's say we went through and we never set up rules. How much longer would this video have been just to sit through and keep picking each one and going through each one? So again, I think if you have questions on specific transactions that you think maybe I should put a rule or maybe I shouldn't, then you know that's a good time to ask or test it out and see if it'll be worth your time or not. Chase Bank, this one, oh, we're splitting this transaction. No principal. That's the description. Alrighty, let's go into our amortization schedule. We are in November, or we just finished November? Yeah, so this is the December 1st transaction. Interest is 33.66. Difference is 0. Good to go. Let's hit apply and accept. All right. Landlord payment 1250 looks good. Sales tax liability looks good there. Square looks good. Yelp is advertising. Google is dues and subscriptions. Sales tax, Amazon. Utilities Co. Yes. Central Insurance. Yes. Market. Merchandise sales here. Foods. HEB. Cafe sales. Okay. These 50 look good. All right, we have a Chase Bank here, which is bank fees. We're at the end of December. I forgot I did not set my date range, so we are seeing more than we should be seeing right now. All right, there we go. A couple left here. Good to go. Okay, so let's go ahead and reconcile. I'm going to go to our bank statements again. Find the December statement. So the December statement is 1,687.58. I hit start reconciling. $0 difference looks beautiful. Let's hit finish now. All right. Back. Alrighty, so change of plans. December was going to be the last month because now I'm thinking about it and having a year's worth of transactions from July to December will be better than looking at 1 month over into 23 and trying to look at it there. So now let's go and look at our reports and kind of look at what we've done now that we've categorized everything and we have reconciled everything. So we know all the transactions are good to the bank statement. So now we can go and see if we have to make any corrections or what we're looking at in terms of how the reports look. Alrighty, let's go into reports. Let's look at the profit and loss. Let's select 7, 1, 22 to 12, 31, 22. So when we run it like this, we're going to see all of the data in one. And let's go ahead and do that first, right? So let's look at how 2022 went in terms of that full year of opening to December 31st. Had about $44,805 in sales. You spent about 13.6 thousand on cost of goods sold. You have 5,000 of coffee and bean supplies, which is a good majority. Your next good majority is dairy and grocery costs, and your next is paper cups and goods. So this all kind of lines for a cafe, where a lot of the big purchases are based in, um, what drives the core of what you have to give out to people. The next thing is you'll see that the merchandise sales were only 270.50, but the purchase so far has been 814. So this is kind of good to kind of see, well, you've spent 814, but you've only sold 270 of it. Is merchandise really worth it for you in the long run if, it seems to not move very well or you have to sell it for really cheap? Moving on to expenses, we have about 1,200 in advertising, a little under 100 for bank processing fees, a little bit of dues and subscriptions that we're paying. Lease obviously makes up a good amount of this, as well as paying ourselves for the time that we're being here. So we have utilities, insurance expense, water, and electricity expense. These are good here as well. And we have our interest expense here. Looks like the business has profited negative $5,000 for the year so far. And so, how is this possible that we did all of this? Our gross profit was 31,000. Our net operating income ends up being this after we pay ourselves, right? So let's take a look at the balance sheet and see how healthy everything is. I'm going to set our date range to, we can set it to the same 7/1/22 to 12/31/22. We're going to hit run report. Alrighty. So as of December 31st, 2022, we have about 1.5 grand in the bank, which is a little concerning, but should be good to go. We have about a negative sales tax liability number, and I'll come and I'll teach you later on in the course because this is a little more advanced way of dealing with this. So I don't want to introduce it just yet. This will be kind of in the holistic review of after you've caught everything up, how do you go and adjust some of these things like the sales tax liability. We can see we've been paying our loan down pretty consistently from 7,500. After about 6 months worth of payments, we landed about 6,500 left on the loan. We have our contributions and our net income is still negative. So overall, even though we haven't profited on paper, what we see, let me have the profit and loss open actually in a separate tab. The business itself is running a small deficit right now because it's still kind of having to absorb that cost and it's still having to grow a little more. But to the owner's perspective, the owner was able to take home $25,000. So what does this really look like in terms of like if you were to back out the owner payments? Um, you could actually look at it as, because if you're a sole business owner, this is kind of how you would want to look at it. Yes, that net income looks like, oh, I didn't make any money at all. But if you want to really look at it from a financial perspective, you would do 25,000, which is paid out, minus the 5,552.82. And your net profit could actually, for the business, would be 19, for the owner, sorry. The net profit for the owner would be 19,447 for the year. However, and this will be kind of later on in the course, I'll kind of introduce some like, bonus videos to kind of understand some of these numbers. But to an owner, this is kind of an important number to see what their net income is from the whole deal. Because remember, they put in a contribution of 15,000, right? So by this number, they've kind of made it back, even though they had been working there. But again, like I said, we'll kind of dive into this a little bit deeper later. But if you were to look at this as purchasing this business, you would want to see that, oh, it costs 25,000, and this is obviously for 6 months worth of paying somebody. It costs 25,000 to run this business and have somebody in it. So if they were to buy it and not want to work there, they would have to pay somebody else this money to be able to do it. And right now the business isn't profitable. So there's a bunch of different ways to look at how everything looks here. And we'll dive a lot more into that later because that's something that I really love. But, again, let you review this, kind of look at everything, see if anything looks really off. Like, oh, maybe I booked my payroll wages paid on accident to office supplies, and you'll see office supplies is $5,000 that month. Then you'll know to look into that and see what transactions make it up. And we can go in to office supplies, click on this number, and we can see based on July to December what makes up all of the office supply spend that we spent here, right? You can see how the balance grows, what the transactions that add up to it are. Then again, another really good way to kind of check your work and make sure everything looks correct is to sort it by months and just look and see if everything really looks consistent. We started late in the month there, 10, 12, 10, 9. Looks pretty consistent overall to me here. A lot of these numbers look consistent. Some of them dip a little bit. You can assume maybe this is because there was Thanksgiving, so it was a pretty long break. Um, we have pretty consistent looking spend on the paper cups goods. Advertising looks decent. There's spikes in certain areas. Insurance looks like there was no utilities that we booked in October, but it looks like the November amounts are double what they usually are. So this is a good indicator that we paid October's utilities in November, and so that's why this is doubled here when it's usually around $100 each. So you can drill down into these and really look at it, right? Now, the one thing you can't really do in this scenario is look at your balance sheet by months, right? So if we were to look at this by months, it would be sort of useful to be able to be like, okay, this is the cash balance and this is what the account ends at the end of every single month. But again, look, you see a lot of these trailing numbers where they don't really change. The balance sheet comparisons become really good quarter to quarter, year to year, or in a specific month to month. So where you're only looking at December and November, or you're looking at all of 22 against all of 21, or you're looking at 2024 Q4 to 2023 Q4, 2023 Q4, or you're looking at Q4 23 to Q3 23, right? So again, I kind of added a lot of extra stuff to the end of this chapter, but I think this is good holistic information to really think about, and this is one of the longest chapters, definitely. So the rest of them should get a little bit faster, and I might over explain some of the things at the very end, but this is a very big this is the chunk of where the course is coming to, where if you went through this whole video, you followed through, you were doing the transactions side by side with me, you should have a really good understanding now of kind of both how categorizing transactions work and how using QuickBooks and using the rules and using batch categorizations and how all of that works. Alrighty, I'll see you in chapter 5. Alrighty, welcome to chapter 5. We're going to be finishing all the remaining transactions in the bank account in this video, and I'm going to show you kind of how I'm able to speed up some of these catch-up type books where, let's say, I have somebody, and this is exactly how the transactions come through, where I have 8 months worth of transactions to catch up for the year, and then we have to submit that for tax filing, and we have another 3 months. I will charge, a prorated fee for some of this work where it'll be a little less than my normal monthly fee to do the catch up because I'm able to do a lot of this bulk work. But I'm going to teach you how to do bulk work really efficiently in this next one. So far, we've been going month by month and setting the date range to be month by month. But what I want to do is show you best practices on how to really do a lot of these categorizations quickly. So when we go back to our transactions, so we have about 600 transactions left, and we have a lot of these are rules, right? Like out of 50 transactions that we're seeing here, almost all of these are rules. But remember, we want to kind of review and make sure that all of these match up, right? So there's two ways to do this. You can categorize or match and sort it by your match, and it'll show you everything. And the reason I didn't show you this before is because let's say you have a date range selected, and you do it, you set this categorize or match, it'll start showing you a lot of different dates. It resets your filter. So it doesn't really work in the previous chapter, what we were doing there. But you can do this and you could review everything if you wanted this way. But to me, especially if you're doing bulk work, there's a little bit more of an efficient way. And that is actually by sorting by description, because you'll see now all of our Amazons are in an order. And especially this makes it super easy to see. But what we'll also see is, and let's see if we can find an example here, you'll see that we'll have transactions that we can set a rule for, and we know that that rule is going to be very worthwhile because there's a bunch of these that are sitting right here. So let's go back to the first one and let's just start knocking a bunch of these out, right? So we know that the 6th Street printing, we can check that the payee is selected on the rule. This one's good to go. A-Smart, we've had it before, and there are definitely other transactions, which is why we have a vendor in here. And let's say because it's been a little bit, we don't remember what it was. This is a really good tool to use. You can click categorization history. And right now it's saying last 12 months because it's really looking at today's date, which is October 2024, looking back in the last 12 months. But if you were doing this real time on a set of books where you're within the last 12 months, it will actually show it to you. But let's go and figure out what this A-Smart is. And I like to open new tabs sometimes. So I'm going to open the expenses tab in a new tab. Going to go to vendors. I'm going to search A-Smart. And we'll see the transaction list. And we're seeing that A-Smart was previously small kitchen tools and supplies. I can actually copy this, go back to the transactions and paste it here. And that just kind of makes it easy. I'm going to hit add. All right, so now we can do some bulk work. We have a bunch of Amazon transactions here, and it looks like 49 of these are good to go. And again, let's say you knew that some of those Amazon transactions in that particular scenario were for different things, right? Then you would go and you would categorize it. Maybe it's a small kitchen tool supply that you ordered, or maybe you're ordering some test coffee. You can get really granular with it, but we know generically, as the owner and how we spend our money, I'm going to be getting office supplies and random things that I need from Amazon. So Andy KS's Donuts, we set up a chart of accounts for this actually. And if we go back here, because we're buying donuts, what is that for? We can look at our chart of accounts that we set up, and we can see that we have a baked goods category. So looks like if we're trying to look at it and deduce what we're doing, it looks like the owner tried to sell some baked goods between January 1st to February, and then looks like either they switched to a different vendor or just didn't order them again and decided it wasn't worth their time. But this was a good enough thing to add in my opinion, because let's say they continue to do baked goods, you'd want to know what the difference is because you're going to buy wholesale baked goods and then resell them. So your cost of goods is good to be in a different section compared to dairy or grocery, because the dairy and grocery is more specifically for making the coffee, which is a different like product. So almost think about your income streams and your cost of goods sold, kind of like how we have a merchandise sales income tab, income, kind of like how we have a merchandise sales income account and we have a merchandise cost COGS account. You can go ahead and accept all of these. Austin Utilities, all of these look good. Central Insurance Agency, all of these look good. Central Market, all of these look good. All right. We can accept all of these rules here. Okay. So So we have a couple of Chase Bank. And again, these numbers can vary, right? So I like to do these more in batch than to set up rules because I think it's harder to really set up rules for everything and make sure that they're correct rather than setting up rules specifically for what you need so that you don't really have an issue with glancing over it and knowing that it's going to be correct. And accept. So now we have all of our Chase payments. And what I'm going to do is I'm going to leave these for now because I actually want to go ahead and save some of the most tedious work for last. So we have Chase payments to landlord, and I'm going to see here that I have a rule, and it does look like it's a Chase payment to landlord, but it's for 160, and it's on 223, right? So this looks kind of weird because there's a payment on August, July. Let's go the other way. January, February, March, April, May, June, July, August. So all of these look good. So I'm going to actually go ahead and leave that one as well. And what I can do is I can select all of these and then just uncheck the one that I want to review and figure out what's going on. I'm gonna hit accept. We have Chase transfers for the payments I made to myself. So let's go ahead and set those. We have two Chase transfer out. Again, I'm going to leave these for later because, this doesn't look like something that I normally have. We have a couple of Costco transactions here. So what I'm going to do is I'm going to select these. And actually, since Costco is a regular vendor that they seem to be shopping at, starting in June of 23, let's go ahead and create a rule for Costco. Dairy and grocery is where would I be buying from Costco. So I'm going to hit a rule, Costco, test that rule. Have, looks like about 9. Oh, he's right. Perfect. All right. Dairy, grocery, Costco looks good. Go ahead and save that. CSC service works, repairs and maintenance looks good. Sales tax liability looks good to me. Um, Easy Ice looks good to me. Figure Eight Coffee looks good to me. Google looks good to me. So I'm going to go ahead and select all of these rules. Dues and subscriptions, HEB, dairy and grocery costs. Yep. Got a lot of our squares. So this is probably going to be a good bulk of what we have left. You can see we have a couple of other. Oh, looks like I skipped over a lot of the ones that I was just hit X here to uncheck all of those real quick. Scroll to the top so we're actually looking at this correctly. We have a April. Don't know if I missed that or if it just for some reason never sorted itself up there, but that's fine. Sales tax liability, we're leaving all of these for later. HEB looks good. Okay, so let's go ahead and select the HEB. So we have this one up here and we have the HEBs, so let's hit accept. We have IKEA 82. We're going to put this into office supplies. Okay, sales tax owed, that looks good. Home Depot looks good. 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 Go ahead and accept. We have a deco, so let's look what that is. Cafe Essentials. So we're going to put this into, and we can set up a role for this. So we have multiple, and we'll probably have more in the future. So deco, we're going to say this is coffee beans and supply. We can test it if we want. It looks like there's like 6. Save. Restaurant Depot, if we want to look that up. Looks like it's another restaurant place to buy things for the rest. Go ahead and create a rule for this since there's few here. Does that look good? Rising Tide Coffee Roasters. Looks like there's only one of these. We'll add that since there's only one right there. Okay, so we have a deco, and we're going to have a ton of squares. So this will feel like we're knocking out a huge chunk of the what we're doing here. Let's see, we have 385 items. At about 385, so let's see how many we can knock out here. It's being weird, so let me go ahead and hit refresh here on the screen, on the website. Okay, so let's continue knocking out these square transactions. And yeah, sometimes QuickBooks can be weird, so refreshing the page before you freak out that something's broken or you did something wrong is always a good way to start. And what we can really do, right, is if you're really trying to bulk do these, is you can show a lot more of these. We can do 100 if we really wanted to, so that it helps us, because there's probably a lot of squares transactions. And the reason I'm kind of scrolling like this is because I'm trying to see if there's anything that looks weird name-wise. And all the sales, generally any money coming in from Square is always going to be sales. So this rule is pretty straightforward. This suggestion's good, so I'm going to keep it there. This suggestion is good, so I'm going to keep it there. Yep, we can accept 89 transactions here. All right, so we got more Square transactions. We have a payment as sticker meal, which is obviously a sticker company. However, what I want you to think about here is sticker going to be a merchandise or is sticker actually something we're putting on the paper cup, right? So in this context, what I want to give you is you can ask your client or you can ask for support and figure out what this was really for. But in this situation, what I'm going to say is I bought these stickers to use on my cups because I didn't want to keep stamping cups every morning. So I'll put paper cups and goods and I'll hit add here for sticker meal. Target, these are good. Venmo, we know our merchandise sales. Vistaprint are not paper cups and goods, so we're going to accept these and then look at the Vistaprints. So the Vistaprint are going to be merchandise costs. So I'm going to expense Vistaprint merch purchase. Apply and accept. Got Waterfall. These look good. Whole Foods looks good. Alrighty, we're almost at the end of the bulk catch-up work that we're doing here. Then we have a couple of edge case scenarios where we have to figure out what's going on. And then we'll be good to go. We can work from the bottom up here because that'll probably be more fun to see the final list being so short. Okay, perfect. Everything looks good in terms of rules. I messed that up, so let me reselect this. It's going to do bottom up, but I can't. Right. So we have a couple more, only 11 more transactions to figure out. And these are going to be all from the amortization schedule, right? This one is lease expenses rent. I want to actually start with these two down here. So we can see that there were transfer outs, and usually, if we remember correctly, and we can go and check in our categorize, right? They chase transfer. Oops. What was the category here? Chase transfer. Let's read this. Let's try that one. Yeah, so we can see that the chase 5,000 usually happens on the end of the month, right? So this is a different type of transfer. And as an owner, these are distributions. These are payments that you're taking out of the account when there's extra cash, and it's not part of what you would normally pay yourself. This is where you take out profits, right? So again, you need to ask because let's say it doesn't have the same account number on there. Usually it'll say transfer to account and it'll give you some number that can help you understand which account that it was transferred to. In this uh in this case, we're going to assume it's going to the same exact account that we're usually taking money into or taking money out of into the next one. And so again, the context for this one that I have for this transaction is that it's a distribution. I'm taking profits out of my own account. So I'm going to say Prithvi, and we're going to put distributions in. Oop, I reset my work, so we're going to have to do that again. Prithvi, distributions. You can accept those two. Okay, so now we have these chase payments, have this landlord payment. So when you have an extra payment to the landlord, this can be a multitude of different things in the scenario of what's really going on. Let's say as a business owner, and it's okay if you don't really understand this, but you have an outstanding CAMREC that you have to pay. And a CAMREC, without getting into too much detail, is if you share, let's say you're in unit one and there's five other units in that same space, there are a couple things that you guys might share. And so the landlord asks for reimbursement, right? But let's say this was a repair that the landlord paid for and asked you to reimburse. What I'll say is I'm paying the landlord for repairs and maintenance. And you can hit add because this is one of those unique situations where you really do want to check and make sure that your rules make sense. So here we're going to say it's a repairs and maintenance for the landlord, and we're going to hit add. Now, for the rest of these transactions, we're going to go through the amortization schedule and split all of them. So I'm going to go ahead and sort the dates so I don't accidentally split one of the transactions wrong. I'm going to pull up my amortization schedule and we'll try to just go through this one by one. So January is going to be 3269. Go ahead and close this. 3269. Principal goes there. Chase Bank. Interest expense. Loan to select our principal. Accept. Let's go to our next one. 3171. You'll see I kind of work weird where once I know the structure of what it's going to be, I'm just going to kind of flow through however I feel like it feels best to me. I'm checking to make sure my difference, it won't let me accept it if my difference wasn't correct to begin with, but 3073 is my interest payment. Difference is 0. Go. $29.74. Looks good. 1,875. Almost done. Only 3 more transactions. It's 127.75. I think it was 27.75, if I remember correctly. Yep. Been done like 7 of these now, and I'm still thinking about which account to pick. 7/1/2675. 2675, was that what it was? Yep. Our final transaction. 25.70. All right. Alrighty. So don't forget, we need to go reconcile. And so after you do a lot of these bulk, if you're really confident, now we're going to go reconcile. But I do really highly recommend, if you want to be really tedious and make sure that you're doing things month by month and really, building your confidence that way, then I would definitely start with that. We left off the January, so January 31st, 23. And then we're going to go to our documents and we're going to pull up our bank statements. Left off on January 23, so let's go to January 23. Pull up our final closing balance. All of them selected. Looks like we're good to go. Pull our next month's ending balance. And honestly, I can't remember how many days in February that year. 28. Right, all the transactions are in there. Looks good to go. Pull up our next one for March. Good to go. April. Looks good to go. Okay, so let's go ahead and reconcile May now. Nope, not 2022, 23. Good to go. Let's take June. We're almost done reconciling now. And by default, QuickBooks will select all of your transactions. So it's just good habit to go check it, but July statement ending balance. Right. Now, one more month to reconcile, and we're almost at the end of the course. How sad. All right. We're reconciling our last month. Good to go. We've reconciled all of our transactions that are available in the bank account. If we go to the bank transactions tab, we'll see that there's zero. We're all caught up. We have the green check mark. We're good to go. We've reconciled each one of these months. If we go to reconcile and we go and look at the history by account, you can see all of the different reconciliations you did. And you can attach individual bank statements if you'd like to here. You can look at the report and you can see all the transactions that make up your reconciliation to calculate to your bank balance, your starting balance and your ending balance. Okay. So now let's go to reports and let's look at everything that we've done so far, right? So let's double check 2023 just holistically real quick. We're going to do 1/1/2023 and we'll do 8/31/23. And let's go ahead and run this report. $126,000 in sales. So it looks like from the previous 6 months, quote unquote, that we were looking at, to this next 8 months, we went from an average of 40 to almost 126, right? So it looks like the marketing we were doing, whatever might be the case, it really ramped up and it's doing really well. Looks like we're maintaining a good cost of goods sold margin here, and we can look into that. That'll be part of the bonuses that I do later. We can do some calculations. We can really see how we're performing at this level. We have some advertising expenses. Rent looks like it's in a good chunk, but in a good place overall. We've paid ourselves $40,000 from January through August. We had a $40,000 payment in salaries to ourselves. We have our utilities, we have our interest expense, and our net income is now positive in 2023. So the business, had some growing pains and took some time to get some customers, but now the cafe sales are really ramping up and there's really good sales going on. So before we dive too far into this, let's go ahead and look into our balance sheet as well. We have a healthy $20,000 in our checking account, which makes sense. Once we built up the balance on the checking account, we took out a couple of $4,000 payments to ourselves, right, in distributions. And we're going to see where those distributions land because they weren't in the $40,000 that we had in payments to ourselves for working, right? So our equipment hasn't really changed. Lease deposit hasn't changed. Sales tax liability is built up, so we really need to figure out how we're going to deal with this, and that'll be in the next chapter. As we dive into what's, how do we do adjustments and how do we really look at this holistically? Our Chase loan is getting paid down, but it's over like I think a 3-year period. So obviously we only did 1 year worth of payments so far, so we're at a healthy $4,900. You can see here, there's distributions of $8,000 here. And this goes into the equity section. So that's where our two $4,000 in transactions came from. And again, we're looking at retained earnings because, again, I forgot to switch the date. So if we switch the date here to as of, we can do 1/1/23 to 8/31/23. We run the report. We'll see that we have the first year, so 2022 from July to December, there was a total of a negative net negative 5,500, right? let me just get rid of this so that it stops complaining. We have a negative 5,502 from 2022, and we have a current net income for this year for 36. So when we looked at that number from before, which was looking at the balance sheet as of 24, you would have noticed that that number was actually not the net income figure. It was 5,500 less, around 31, 600, some change like that, right? And that's because as you move on to the next year, net income rolls into the retained earnings. And again, we'll go over some of those other things, but a lot of the major adjustments you'll be making are going to be CPA guided. Fixing sales tax liability is not going to be a CPA guided thing. We're going to learn how to do that together. But let's say, journaling distributions into your retained earnings, journaling uh, your asset depreciation, those things will be CPA led and they'll tell you what to do. And most of the time, especially, if you're sharing your QuickBooks account with your CPA like you should be doing, they will be able to do those journals for you. So you don't even have to worry about knowing how to do it. Um, so from here, we can move on to the next chapter and really learn how to finish up these books, generate some reports, and do some calculations on these reports as well. So I'll see you in the next chapter. Alrighty. We're getting close to the end of the course, which means you are very close to becoming a bookkeeper that's ready to start and has had a round of practice, has done a set of one full year worth of books. And now we're going to review our stuff. We're going to learn how to take care of that negative sales tax payable balance on the balance sheet. And we're going to go from there. Um, and we're going to wrap up this course with this chapter. The next video and the next chapter will be a little more of bonus material, where we're going to download Excel reports of the profit and loss and balance sheet, and we're going to, make some assumptions and see what we can really figure out and what type of metrics we can really draw. Okay. So for chapter 6, we're going to be looking at our statements, really understanding the simple trends. I went over a little bit in the last chapter, but let's go again and let's do this from scratch so that we can look at these reports after we have fully categorized and reconciled books. So what I want to do here is I want to open another tab real quick just to have my balance sheet and profit and loss separately so I'm not having to run them constantly. Then I'm going to set my date range to 7/1/22 to 8/31/23 because that's the transactions that I've done so far. And in the next one, I'll kind of go into looking at it more in a reporting sense rather than looking at it more in the way that I'm looking at it. But for now, we're going to set up our balance sheet to run like this. We're going to hit run report. And we're going to go back here and we're going to do the same thing. 7/1/23. 7/1/22 to 8/31/23. So holistically, for let's say the date today is September 1st, 2023, this is what it would look like from opening to date. You would have a total income of 170,000. You'd have a total cost of goods sold of 46, which means your gross profit is 124, round up 125K. You have your total lease expenses, and it's good to sometimes review these, check against your lease schedules, and make sure that this number makes sense, right? So if we really wanted to, we could go through, go to our lease schedule, and we can calculate, okay, we know 101,250 is the base rent, and we have our rent table here. We know we have a 1,250 security deposit, right? So we have 1, 2, 3, 4, 5, 6, 7, 8 payments of 1,250. So that's 10K. Then we have 1, 2, 3, 4, 5, 6 payments of 1,410 times 6, which is 8,460. I'm writing these down on a sticky note on the side so that I can add them up again. And then that leads us to the payment we made on August 1st. So September 1st, we haven't paid yet, so we're going to leave it at that. So what we need to do is we need to add 10,000 to that number. And actually, the security deposit goes on the balance sheet, right? So let me take out that 1 month that I accidentally added in for the security deposit because I counted 10. So our number that we should see on the profit and loss spent in rent based on this rent table is 17,210. And that matches. So there's ways to, that's kind of how you quote unquote audit something is you can go back, check the schedule and make sure that that number is really close or is exactly the same. So we can see open to date after paying ourselves $65,000, the business's profit $30,000 after everything. And that's including $65,000 worth of owner payments, right? Taking a look at the balance sheet, we can see we have a healthy $20,000 in cash. All of our fixed assets are still here. We have this number that we still need to take care of. Our Chase loan, again, paid down like last time. What you'll notice is at the end of the last chapter to this chapter, the balance sheet doesn't really look any different. We're running the dates for the profit and loss and including July now, instead of in the last chapter, we were looking January 1st, 23 to August. But now we're looking at July 22 all the way through. So we're looking at all the dates of information that we have right now. So this will look slightly different because we're encompassing a lot of different things. But the balance sheet is always a snapshot as of a date. I know that there's a start and an end date, but that is for a different purpose in QuickBooks. Really, a balance sheet is only as of one date, which is your end date. So what we can do here as well is we can set this to 8/31/23 and have the same day, right? And if you run the report, you'll see that it is the exact same balance sheet. But if we set it like this, what we can do is we can compare it to a previous period. And right now it's previous year, sorry. And then we can hit run report and we can see this is the balance sheet as of the 2023 August 31st. And this is the balance sheet as of August 31st, 2022. 2 months right after we had opened, right? So our bank balance, the cash that we're sitting on, is significantly increased now that we have good cash flow, which is awesome. We've gained a sales tax liability. Again, we're going to take a look at that here soon. Don't freak out too much about it. And then we're going to see Chase loan is going down from when we first took out the loan to here. We can see that we took some distributions in this period of time that we're looking between 2022 August and 2023 August. And we can see that the net income at the moment of August 31st, 2022 is negative 8,000, but 2022 ended up falling under this amount and the rest of 23 was here. Okay, so let's take a look at the sales tax liability. What I'd like to do is I'd like to set the date range back to 22 to 8/31/22, 23, sorry. And the reason we're doing 8/31/23 and the reason why this date range exists is because when you click into, now let me take out this previous year thing. Because what this date range does, because if we were to do 8/31 to 8/31, if we clicked into one of these accounts, we would only be able to see transactions that were posted on August 31st, 2023, right? But when you have this date range, it gives you all of the transactions that add up to that, right? So these are all of the individual transactions that happen on a month-to-month basis for the sales tax that we're paying to the state, right? And so what we really need to think about is sales tax an expense, right? So the whole time we've been looking at the profit and loss, you don't see sales tax here. And this is because in almost every single situation, sales tax that you're collecting is something that you're passing on, right? So you would never want sales tax to come in as its own individual account because every single penny that you collect in sales tax legally belongs to the state. So you might collect it, but you're paying it out back to the state after when it's due, right? Which is typically within 20 days of the month ending, you have to pay out the sales tax. So what we need to do is we booked all of our square lines into here, right? So when you charge your credit card at a cafe, you're paying the whole thing, right? You're not paying sales tax separate, you're not paying for your coffee separate. It's coffee, sales tax, tips all in one. We're going to assume this cafe, and maybe I should have said this way, way earlier, but then we're going to assume this cafe doesn't have a tipping culture. So it's you only pay for your coffee plus tax. These deposits include your sales plus the sales tax that you're collecting. So, and again, this can be a CPA led thing if the CPA really needs, you don't feel comfortable doing this, you don't understand it. This is something valid that you can take to somebody above you or take to your CPA and ask for help. But what we need to do is for every one of these transactions we have here, we have to go and reduce our income by that amount. Okay. So what we're going to do is I want to open a new tab just to open a new tab so we can have everything kind of in the same. We can keep looking back and forth between these, right? So the first expense that we have is this. And let's go back to that in a second. So I just opened this up because I wanted to be in a familiar place. But what we're going to do is we're going to hit new and we're going to go to journal entry. Okay, so we have our journal entry open. And what I want you to do is kind of follow the motions here with me. And when we check our work, this will make a lot more sense. Debits and credits have been explained in a lot of different ways. And I don't want to introduce the concept simply because I do not want to add more confusion to something that's actually pretty straightforward and can be understood in a trial and error method if you really want to learn it at that very basic level, right? So let's go to our transaction report. This is from our balance sheet, remember? And we're going to see that there was 197.99 paid out on September 1st. So we can keep it simple and we can just go ahead and say each month is each month's. Or what we can really do, right, if we want to display this correctly, is a payment on September would be for August's tax that you collected in sales tax, right? So if we were to look at this month by month, we would really want to reduce each month the sales tax that you collect on this month. We would want to reduce it here rather than reducing it on September 1st. So what we're going to do is we're going to go to journal entry and we're going to select August 31st, 22. We're going to hit our sales tax liability. We're going to hit our income account, which is cafe sales. And here in the debits, we're going to put the 197.99 balance. And again, cafe sales is where we're collecting the sales tax. So where are we paying it off? We're paying it off to the liability account, which is the sales tax payable. This is your journal entry, right? And I'm going to put a description in here. Sales tax collected. Sales tax paid. And here in the name, we're going to want to put Texas Comptroller. And here we can put Square if we really want. But in this scenario, a name isn't super required. I'm going to change the journal name to be sales tax 22.8. And it's going to look a little weird why I'm naming it like that, but the way that QuickBooks likes to name its journals makes it to where if you name it like this, it'll kind of incrementally work for you rather than have to be something irritating that you have to keep editing. So what I'm going to do is I'm going to hit save here. And I'm going to go back to the transaction report and I'm going to refresh this report. And what you'll see now is that our journal entry lands here where it says sales tax paid. Oh, actually, I should go and adjust my journal entry. So I'm going to change that to collected because that is actually a collection and the payment is something that we did later. So I'll save this now so that it makes sense when you're looking at it. We can refresh this report again. And you'll see we have a journal entry sales tax collected and the balance actually increases and then zeroes out now. So if we were to go to the balance sheet in a separate tab again, and we were to look at the balance sheet as of September 2022, right, from 7/1/22 to 9/30/22, and we were to run this report, we'll see the sales tax liability is zero now, which is good, right? Because we did pay that but we had to realize where we collected it in the first place, and that's why we had a rolling negative number building up. So let's go ahead and create the next one. And I want to show you how checking your work will really work in this situation. Oh, and just to show you how it reflects in the profit and loss, you see it's 2714 here. If we refresh this report, we hit run report again, you'll see that it decreases by the sales tax collected. And this is true because if you're not considering sales tax as true income, then it should be something that's not really reflecting in your income line, right? So what we're doing with this journal is we're reducing our income line and we're increasing, putting a positive number into our liability line. So we're moving that sales tax that we collected around. So let's go ahead and create the transactions that we need to balance out the rest of these sales tax payments that we made to the state. What we'll do here is for October's payment, which is September, it's $708.40. So we're going to go here. And what you can do is you can hit save and new. But the reason why I like to hit save is I like to hit more and hit copy. After you hit copy, you'll see a couple of things will change. You'll see sales tax change to 2022-9. So, for example, if you had anything else here, you had like 9-2022, the original number was actually 8-2022, right? It would have made this a 23, which is why I like to have 2022-8, because then when you make the copy, it'll incrementally increase that to 2022-9. And then because this is sales tax we're collecting in September, we want to make sure we move this up 1 month. And our number again was $708.40. And I know right now you're kind of following along, so you know exactly where to put it. Let's say you mess this up, right? 708 and 40 cents. And let's say for now, we do a typo, right? If you try to hit save on this, it'll know that it's not balanced, and so you have to correct it. And I don't want to get too granular into the details, so I'm not going to explain exactly why this needs to be equal on both sides just yet. That'll be for a whole nother course where we dive into doing accounts payable, accounts receivable, understanding the credits and debits. Right now, again, we're focusing on categorization, reconciliation, and being able to look at the reports and understand the reports. So again, continuing on this, making a mistake. Let's say you accidentally flip the position of where they should be and you hit save. And when you go to the transaction report, if we refresh this report, and you look at the values, you'll say, oh, wow, that didn't actually zero out the account like it should have. And if you go to your profit and loss and you update this report as well, you'll see that this number went up from what it was before. So we actually obviously did something wrong there, right? So what we should do is go back to the sales tax journal. And let's say you closed out of it on accident. What you can always do is click new journal entry, click on your history, and you'll see all of the journals that you've created. And this will be the date that you posted the journal on. We can go back to this journal and we can flip it. Control of Texas, square, and these exist because we made a copy, right? We don't have to keep typing them in. Then we can hit save, go back to our transaction report, refresh it. Let's check our balances over here. It zeroes out now, so that looks like it was correctly done. Let's double check that this is going to reduce, and it did. So we're good to go now. So that's kind of how you can check your work and kind of understand what's going on between the debits and credits. But again, this can be CPA led. So if you really are getting confused and you don't understand how these journals work, let your CPA do it or let somebody that understands them do it before you create a plethora of issues. Because, for example, if you're doing a payroll journal, these payroll journals can be like 10, 12 lines long, depending on if you have employees and if you're doing retirement accounts and a lot of different other things, reimbursements. So ensuring that you understand how to use this is like key before you start messing with these. But in this type of simple situation, you can follow the motions with me and check your work, and you'll start to understand the basis of how journal entries work, which is, again, the entire purpose of this course is to give you fundamental knowledge on how everything works. I'm just going to hit save again just to double check I've saved it. And then I'm going to hit copy so that we can do the October. And we paid October and November, so we're looking for the November value, which is 889.23. That looks good. This looks good. We need to update our date to the next month. Gonna do that. Hit save. More. Copy. And I like to wait to refresh the report, and this is obviously something that's personal. If you really want to refresh the report every single time and be like, yeah, it's zeroed out, I like to see all of the zeros happen at once. So my next one is 751.11. So I'm going to wait until I create all of mine before I go ahead and refresh my report. I'm going to hit save, more, copy. The next one is 750.23, and we can double check that's correct. 750.23. Looks good to go here. That looks good. I forgot to change the date. Always check. Perfect. We're going to make a copy of this. Go back. We're looking for February 8/27/42, correct? Yeah, 8/27/42. And we're going to have to change this to 23-1 because this is January 1st. Go, let's save. More, copy. I'm gonna look for March's, which is $1,003.52. This is February 23. Yep, that's good. This looks good. Go ahead and save. Copy. Gonna look for $946.48. 946.48. Good. That looks good. That is good. Or copy. And a 989.97. 989.97. This is in April. Good. 1,074.53. I don't think I hit copy. That was a good catch because I would have saved that and I would have realized later that I'm going to hit copy and I'm going to hit yes without saving because I messed that one up. I realized when I looked at the journal number and the date that it was still 23/4, and I knew if I had made a new copy that that should have been a 5. Um, and so it was a good catch by me. If you had messed that up, you'll notice when you do your review on the transaction report and you refresh it, you'll notice that one of the months just doesn't actually zero out. So you'd go back and check and you'd realize you're missing a journal. Anyways, so that value was 1,074.53. And we did change that date to be 5, so we're good there. I'm gonna hit save. More copies, so I don't forget to do that again. 1,061.40. I set this to June. That looks correct. Let's save. We have one more to do, which is 1,231.31. 1,231.31. Huh. All right, and then we have to update the state here. And we're gonna hit save and close this time because we finished all of our journal entries, right? So let's go to our transaction report, refresh this, and make sure that everything zeros. Scroll over. Beautiful. We see a zero at the bottom. And then the other thing I like to do is just make sure, because we're doing this month by month, everything should be positive, negative, positive, negative. So we should always have positive balance, zero balance. Okay, so let's go back to our balance sheet and look and see that we have a beautiful $0 sales tax liability because we've paid all of the sales tax that we've collected. Go to the profit and loss and we run this report. You'll see this balance is now going down. And we went from about 170 to 160K, which matches that I believe it's about 10,000 in sales tax. So that is kind of making those adjustments. This looks really, really, this looks like a lot. So let's say we really wanted to make it a little more concise, but we want to look at over time. Let's look at quarters. So quarters are, you know, April through June. So this is going to cut my Q3 down because it should be July through September. But since I've set my date to be this, it's going to kind of adjust it. You can see on an average 3-month basis how the business is doing. And what we'll do is we'll export this to Excel in the next bonus chapter. And we will go through and kind of look at some of the calculations we can do and some of the metrics we can assume from the two reports that we have. But let's just make sure we've covered everything in chapter 6. Essentially, we've understood how to do debits and credits at a very basic level and being able to check our entry after we save it to make sure it makes sense. And we've cleared our negative sales tax payable balance by understanding how to do those. And that was basically the biggest part of this. This is more of like a bonus section already in itself, where if you are trying to really learn this type of stuff, this is the basics of how that works. And the next course that kind of dives into higher level accounting concepts will really help you understand how that function works. But for the purpose of this course, learning accounting basics, that was essentially all you needed to know about journal entries. And we looked at the 12-month statement for the profit and loss, and we did a balance sheet comparison for prior period. And again, we can do this again. And now we can see sales tax is accrued here, but hasn't been paid off just at the 31st date because we're accruing it on the 31st and we're paying it off on the 1st. So we see that there's that balance standing, but everything is good as of then. So I will see you in the last chapter of this course. Alrighty, welcome to chapter 7, the last chapter of this course. I can't believe we've made it all the way. It has taken a lot of time to get through all of those transactions, but we're finally here at the end. And at this point, I would say you could start applying for admin assistant jobs. If you're somebody that's, looking at trying to pick up bookkeeping as a career, you can start to look for admin bookkeeping jobs. You have the core basics of how to do bookkeeping, and you can be confident that if you walk in and you start doing categorizations on transactions and you understand a client's chart of accounts, whether that's mapping it out for yourself, whether however you need to do it, you have the core skills to be able to jump into QuickBooks and start doing bookkeeping. We learned how to categorize bank feed transactions simply into one category, and we also learned how to split transactions, which are those Chase loan payments that we did. We set up the entire chart of accounts before we began. So that was a really good exercise in being able to just create accounts if somebody asks you to do so, or if you're setting up your new accounts as a business owner. You can understand how your transactions flow into the balance sheet and profit and loss. Maybe not at 100%. You don't understand the entire theory, but you do know where your transactions end up if you're picking a certain type of account. You've reconciled every single month of the bank account, so you know how to reconcile account, you know how to look at how to reconcile. Now, fixing reconciliation problems, again, I think that's more of an advanced thing, but you can always ask in the community if you have questions. understanding journal entries, you understand how to do them, how to create them, how to save them, and how to look at where they impact your your total report lines. So that is a core of understanding them. And the core of debits and credits, I know I didn't necessarily completely under explain it, but we will get into that in a future course where it is more and more important to really understand what the debits and credits really represent. So what's next? We're going to be looking at accounts payable and receivable in the next course, where we're invoicing sales. We can do matching, three-way matching with accounts payable, accounts receivable. We can do a lot of different things as well, between all of the different receivable terms, putting in discounts and all of that jazz. Notes payables and receivables, where a good amount of journal entries could come into play, where you have two different companies with the same owner and they kind of pay for different things for each other. So we need to be able to, you know, account for transactions that necessarily aren't moving cash, but are the responsibility of another business. We'll go over things like payroll and other advanced functions that we can do and a lot of other stuff. So just to kind of wrap up before we go on to the next bonus, which is exporting these reports to Excel or Google Sheets, which is what we'll be using, and kind of deducing some information from it. I just want to say, if you got through this whole course, I really appreciate you taking this course. Please give me as much feedback as you can, even if it's chapter by chapter or video by video. This is what I liked. I think you really went too fast here. I think you didn't explain this too well. Please explain it. That'll give me the opportunity to make this course even better and upload revised versions of that so that people can learn and do better. I was a tutor before, so I really like to see people go from zero to hero when it comes to looking at something and being super overwhelmed and then feeling like they really understand it at the end of it. And so I'd love to hear your feedback. Please give me that in the community. It would be amazing. Thank you for taking this course. And if you do look at the next video, I hope you watch it and get a little bit excited, because the next video is kind of what I really think financial services, like having a job in financial services or understanding financial statements, how it can be kind of fun and how we can use that to, figure out what our next moves might be. Alrighty. Thank you so much, and I'll see you in the next video, or I'll see you in the next course. Alrighty. Bonus section, we're going to do some quick, I don't want to spend a lot of time on this. And again, if you really want to learn, the community is there. Your subscription that you're paying for this course includes being able to ask ad hoc questions. I'm not going to be sitting there and doing a bunch of work for you, but I can definitely help you understand how to do a lot of different things, right? So let us go to the balance sheet. And for now, actually, let's just leave the balance sheet alone. I'm just going to do the profit and loss because I want to keep this simple. And I think if we go into balance sheet, we're going to be thinking about cash flow, and that ties to the third financial statement, which is statement of cash flows. Let's just stick to the profit and loss and kind of being able to deduce information from this. So you'll see that there's always a total line here, and you can adjust your settings to not have the total line and only have months, but the total is really going to help us here. I'm going to switch this back to months, run my report, then I'm going to export to Excel. And then once you have your Excel file, what we can do here is go to our drive, and we can drag this into our drive, hopefully. Yep. So we can upload this Excel file to the drive. If we hit refresh, we'll see our Excel file. Open this up. The other way to do this is to actually go through and open up a new sheet, click File, Import, and then you can upload your file here, and that'll make it to where you won't have this little Microsoft Excel format. But for the purpose of this, it's not too important what format you have it in, so I'm just going to leave it. In this, you'll see your entire profit and loss in an Excel format, which makes this really handy, right? So one thing I really like to do is you can look at these lines and Again, you would need to know a little bit of Excel to understand what I'm doing here and how the formulas are driven. But let's say I want to understand what my margin is per cup of coffee sold. I want to learn how profitable my per cup of coffee is before I pay rent, before I pay staff, because this is important, especially when you're in a volume-based business, where if your gross profit margins aren't high enough to begin with, then no matter how low you get all of your expenses, there's no way you're going to be profitable, right? So sometimes as a business owner, you really have to think about what you're charging to ensure that your margin makes sense, right? You can think about it backwards. And so let's kind of go through that. Uh, let's go through that. We have total cost of goods sold. I'm just going to highlight these real quick just to make it a little bit easier for us to see what each of these are. We can do some stuff like also where we freeze this, where we select that column, go to freeze one column. It doesn't want to freeze a merge cell, which is totally fine. I'll leave that for now. And then what I want to do is I want to highlight net income. And then another really good one to highlight is going to be payroll wages paid. And this is payroll wages only for an owner. So let's say this also includes some employees, then we would want to do a couple of calculations to back out the owner and, you know, back out the owner payments so we can see exactly what the owner payments look like. But these are kind of the ones that I really like to see. This one's another bonus one that I think is really nice, and we'll kind of go over how to calculate that as well. But what I want to calculate is gross margin, right? So gross profit margin. And how I'm going to calculate that is I'm going to calculate it. Well, I can show you how this is done. Formula for gross profit margin. If you don't know this, and I think this is really valuable for, if you're a business owner, this will really help you understand how gross margin is really calculated as a percent. So it's revenue, which is your income minus cost of goods sold divided by revenue. So we can go in here and let's just do totals, right? For now, we're going to do totals. We're going to say revenue, and let's match the formula that we saw in Google, right? Which is revenue minus COGS. So in a parentheses, revenue minus cost of goods sold divided by revenue again, right? And then what we can do is we can make this a percent. We can increase some decimal points. Oh, that's too many decimal points. So we can see that our gross profit margin is 71% right now. Let's say we really wanted to aim for an 80% gross margin. We can do the reverse calculation, right? So if the formula here is the percent that we're calculating for is revenue minus cost of goods sold over revenue, and let's say our revenue is just too low and we're trying to find what our target is. So our cost of goods sold is this, but let's say our revenue is like 50,000, right? We're barely breaking even on just the cost of it. And I need to figure out how I need to price it. So let's work backwards to that number, which is 80% is, I'm going to say equals, and the original was revenue minus, and this is where maybe we need to do some algebra, right? So we can pull up a little thing and do a little bit of algebra. And this is typically kind of the furthest it goes in terms of how much math we're going to be doing in general. But we have revenue and financials, usually anything that's negative is in parentheses. And then this equals our percent. And this looks really bad. And it's because I'm not putting it on paper. I would look a lot better if it was on paper. So obviously, if we were to do, if we were to solve for revenue here, right? We would want to do revenue times your percent. And then we're trying to separate revenue by itself. So then revenue, so this is revenue times percent. And then revenue minus revenue, but that is a positive number. So we're going to move this here because this will become positive after we move it to the other side of the equals. I really apologize for this. I hope someday I decide to get an iPad and really be able to draw this out for you. So this is revenue minus percent revenue, and this is percent times revenue, really, right? And so then if we pull this all out, what we'll get is revenue times 1 minus the percent equals cost of goods sold. So then to solve for revenue, it's cost of goods sold divided by 1 minus your percentage, right? So this is the formula we're going to end up at, which is we want to do cost of goods sold divided by 1 minus your percent. So we're going to do equals cost of goods sold divided by 1 minus your percentage that you've picked here. And you'll get that if you're aiming for a 80% margin, you would want sales of $231,919, and that would land you at an 80% margin. Now, let's say we set this back, our calculation should land us right at the exact number, right? So what we did here is we made it equal to this cell. So this cell is equal to this cell. And we can see that our calculation actually works. So this is another reason I like putting your different variables into different cells, is because you can manipulate them. And you can see, okay, if I had a 60% margin goal, I beat my margin goal by almost 10%. And 10% translates into almost 50,000, excuse me, translates into almost $50,000 worth of top line revenue with that type of margin. So this is a really good, if you're a business owner, there's good ways to kind of track to see if you're meeting what you want and what you would have to get to if you wanted to maintain your current cost of goods sold, but really achieve a better margin on what you're selling. So that's kind of the first one. The second one I really like to do is advertising, because let's say advertising brings in new customers, and let's say these are all brand new customers. And how would that really play into? I know in this situation, most cafes will have a lot of repeat regular customers, but let's say you're an auto detailing company where in the auto detailing space, you're usually servicing a customer once every year, or once every 6 months, maybe. But like if you do a 5-year ceramic coat, theoretically, if they go through a different car wash just to get it washed basic, you would only be seeing them once every 3 to 5 years whenever they need a ceramic coat update or whenever they buy their next new car, right? So this calculation is really good to see what your return on investment is for advertisement. So let's go back here and let's look up formula for return on investment, which is ROI. ROI is net income divided by total cost times 100, right? ROI is net income divided by total cost times 100. And this times 100 is just to, you know, create to help create the percentage part. But here it's saying net income, but I want to see kind of what the investment return specifically on advertising is, because I'm assuming that in this scenario where these are all brand new customers every single time, they never return, it's always a new customer. This is responsible for generating this, right? So I want to calculate your net income divided by total cost. This divided by this. 78 times return on investment. And what that really looks like is if we add in that times 100, looks like you had a 7,800 times return on your advertisement, right? And this is kind of unrealistic, because if you were an auto detailing shop, you'd probably spending near 2,000 to 5,000 a month to bring in leads that are bringing you a lot more revenue on the top line, right? But then you'd have a lot more labor expense. There's a lot of other things. And this is what gets really interesting about all of these um, different types of businesses, and why I think bookkeeping is really nice. So one of the things I wanted to review here, right, was, remember we had distributions of $8,000. So we can say total take home pay for the owner was 8,000 plus the 65. And so total take home pay between these 11 months, or not 11 months, sorry, 13 months, 14 months, sorry, the count is showing me 14, but only took home pay for 13 months, would be $73,000 is what they took home. But how does this affect the way a business is valued, right? So to an owner, they were able to take home that $73,000. To someone that's looking at buying this business, right? What they would see is that if they weren't running the cafe themselves, they would have to pay somebody $5,000 a month to work there. So right now, your net profit over this year is $20,000. But to a buyer, over this year to you as an owner, your profit is 73,000. But to an owner that's not willing to sit there and work, that profit is really only worth 20,000 a year. So this kind of shifts your perspective as well, because what an owner would theoretically like to do is to replace somebody at maybe 60 to 70% of the cost they have, right? So let's say they put them right at like 3,000 a month. If they were able to do that, then, that number changes significantly to how much it really costs to run this. And then the business is profiting almost double because you were able to find cheaper labor to put in place of you. So, okay, so the last metric we can calculate is just what is our net income to our gross revenue. So what do we end up with after we collect 160,000 and we end up with 20,000? What is our margin on net profit? So what is like the distributable cash is almost what you can think of it as. It's almost 12% on your top line. So these are some like very basic but nice little metrics to see, and these can help whether it comes to just understanding your business model. There's a lot more other um, things that you can calculate. For example, let's say you feel like you're paying way too much in bank and processing fees. Very standard wise, 2 to 3% processing fees is very standard. So let's see what our percentage of collecting all of this was, and it was very low. It was less than a tenth of a percent. So I would say this is a big win. If your payment processor is a fixed rate and you're really saving money, this is a big win. But it's especially as you scale and you become bigger, this number is okay to be at 2 to 3% because it can help you make sure that you don't have defaulted payments, things like that. I know in the sense of a cafe where you're swiping a credit card before you even get the product, it makes a lot of sense. But when we get into the next chapter where it's like APAR and you're having to collect bills from the companies that you're doing work with, then that being able to collect that amount up front and making sure that it's collected within the time frame that you're expecting it is a big deal. And if that means you have a little bit extra payment processing to make sure that you're getting payments in the bank, that's worth it to a business owner. This is how I see it, at least. So, okay, that was kind of it for our bonus um, section. I hope this was a little bit in terms of helping you understand how metrics are designed and how we can really take something like a report that we spend a bunch of hours on and then deduce some information from it. This is one of the ways that I do it. I have several templates that I've kind of set up for myself that make it easy to put in a lot of this information and then be able to extrapolate some data. This exact thing where we're looking at how do we target our margin based on what we're trying to reach. This is something that I do for some of my clients that is really helpful, especially when they're in their first 2 to 3 years of starting a business and they're trying to really grow. It ensures that they're not overspending on certain things and they're keeping within their ideal end goal margins, right? Is they're reaching their end goal.
Okay, so that's it for the bonus for now. Obviously, if you really wanted to, you could create some graphs from this. We could go even further over everything, but this is the end of the course, unfortunately. Again, please use the community. And again, thank you so much for actually going through all of the videos, watching it. If you made it to the end of some of these where I've kind of, taken a lot of time to explain things, I hope I've explained things in a holistic way that really makes sense to you. I know that word has been used a lot by me, but I think it is really important to understand the big picture so that all the little tidbits of details really make sense as you start to look at everything. So, again, please give me feedback in the community. Please reach out. I would love to hear what you guys think. And I really hope that this entire course was helpful to you. Thank you so much, and hope to see you in the next course, or hope to see you in the Discord.